Okay, friends. So, very good afternoon, all of you all. Welcome, welcome, welcome. And I'm very happy to tell you one thing that we are going to continue with the PGBP chapter. No good news. So, yesterday we started with PGBP chapter. Okay. And today we are going to continue that. And yesterday we started with section 28, if you remember. Okay. So, in section 28, charge is there. Which type of income will be chargeable under the head PGBP. So we did, general charge, because there are two types of charge under this head. One is general charge and another one is specific charge. So the general charge is saying that any profit or gain arising on transfer, any profit or gain arising from any business or profession which is carried on by the assessee at any time during the previous year, that amount will be taxable. That profit or gain will be taxable over here. So we had a discussion about that. What is business? What is profession? Then what is the meaning of the term that it is carried on by the assessee? It must be carried on at any time during the previous year. What is the meaning of at any time during the previous year? Now we have to discuss that how to determine that profit or gain. That we are going to do a little bit later. But first, after that we started with specific charge also. If you remember, specific charge gives you a list. It will start from 28 clause 2 and it will go till 28 clause 7. So there are certain incomes which are written in these clauses, clause 2 to clause 7. There are certain incomes. If you earn these kind of specific incomes, then 100% these incomes are going to be taxed under the head PGBP only. Okay. So out of all those incomes, we saw one income yesterday, any compensation or any other payment which you are receiving on termination or modification of managing agent agreement, or you might receive that compensation or other payment on termination or modification of agency contract in India, or you might receive that compensation or other payment because the management of the business or the property is vesting with the government or any government corporation. Or you might receive that compensation or other payment for what? For termination or modification of any type of contract entered in the course of your business or profession, known as business contracts. Yes or no? Now, this specific income we saw yesterday. Now, today, what we are going to do, that we will check out the other incomes also. Other specific incomes also. See, this was the first income. Okay. And the second income is incentives received by the assessee who is engaged in which business? Export business. So if you are an assessee who are doing any business and your business is an export business, so in your export business, usually you get these kind of incentives from the government. So whatever incentives which are written here will be received by only those assessees who are doing export business. Okay. And when you get these kind of incentives in the course of your export business, even these incentives will be treated as your PGBP income only. Number one, you are having some import licenses, also known as import entitlements. If you sell those import licenses, and any profit arising on sale of that import license will also be taxable under the head PGBP. That is your PGBP income. If the government is giving you some cash assistance for your exports, sometimes you'll get some money from the government because you are doing some exports. So to motivate you that keep on doing more exports, keep on earning more foreign currency. Okay. So the government will give you what? Export incentives in the form of cash assistance. Some money will be given, some subsidy will be given in cash. That amount will be your PGBP income. Other one is duty drawback. Whenever you bring some raw material from outside India for the purpose of your manufacturing process. So you will process that material, convert it into finished good, and then that finished good you will sell outside India. That finished good you will export. So in that finished good which you are exporting, in that finished good, whatever raw material you have used, that raw material you are importing from some other country. And on the import of that raw material, you must have paid some customs duty, import duty you would have paid. So pay that import duty first, bring the raw material, convert the raw material into finished goods, and then that finished goods when you export, so do one thing, whatever raw material was used in that finished good, on that raw material, whatever duty you had paid, no, custom duty, import duty, take that duty back from us. We are giving that duty refund to you. That duty refund, the duty once you have paid, and that duty is given back to you, is known as duty drawback. So whenever you are getting that duty drawback, that is also your PGBP income. Sometimes you get duty entitlement passbook, DEPB, known as duty entitlement passbook, or you get DFRC, duty free replenishment certificates, duty entitlement passbooks or duty free replenishment certificates. So usually what will happen, that the government will issue a DEPB to you. DEPB means duty entitlement passbook. And in that passbook, a credit of tax will be given to you. A credit worth 20 lakh rupees, example. So in that passbook, on the credit side, 20 lakh rupees will be written, that whenever you are going to import something, on that import you are supposed to pay duty, import duty, yes or no? Don't pay the import duty to the extent of 20 lakhs because you are having a credit of 20 lakh in your DEPB. So for example, if you are bringing some material, okay, from outside India, and on that material, if the duty, import duty was supposed to be paid rupees 5 lakhs. So you are not supposed to pay that 5 lakh, just show this DEPB to the customs authority. In that DEPB, on your credit side, 20 lakh rupees is appearing as your credit. Against that 20 lakh, that 5 lakh will be adjusted. Now, still you are having that 15 lakh rupees of credit. Again, you will bring something. Again, you will, import something. On that, again, you are supposed to pay the duty. Now, the duty amount is 12 lakh rupees. You still have a credit of 15 lakh. Use that 15 lakh credit against that 12 lakhs. You are not supposed to pay the duty actually, but that duty which you are supposed to pay actually is given to you as a credit on this passbook. So to the extent of this amount of duty, you are not supposed to pay the customs duty. Getting my point? You can use the credit given in this DEPB. Because the government also says no, that see, if you are paying the duty, bringing the raw material, using that raw material for manufacturing a product which you are exporting, and anyways we are going to give you back that duty in the form of duty drawback. So why to put you in that trouble of claiming the refund, claiming the duty drawback and all? Have that duty credit from us in advance only. To the extent of this much amount of duty, you are not supposed to pay any duty. So that DEPB license, DEPB, duty entitlement passbook also can be with you with some balance. Now which you are not going to use in the future. Yes or no? But that passbook will expire. There will be a expiry time. So what you will do? Before the passbook gets expired, okay, I still have the credit in my DEPB. Let me sell the passbook to someone who wants it. So you sold what? Duty entitlement passbook having some duty credit in it. So profit will arise on sale of that passbook also. Even that will be treated as your PGBP income. One is a DFRC, duty free replenishment certificate. See, it is just like DEPB. In DEPB, what happens? They give you a credit of duty, no? DFRC is something like that. In that certificate, they will write the value of the imports. For example, 50 crores worth of import. In that certificate, they have mentioned the value, that to the extent of this value, whatever imports you will make, On that import, whatever will be the duty that you are not supposed to pay. Now they are not talking about the duty, they are talking about the value of import. So you are bringing the goods to India, you are importing the goods to India, you are replenishing your stock. Okay. So replenishment of your stock to the extent of 50 crores, don't pay any duty. Now out of that DFRC, you have used the limit of 40 crores. Still 10 crore limit is available with you in the DFRC. What you will do? You don't want this 10 crores to be utilized by you because enough stock is available with you. So you can sell your DFRC also. Getting my point? These are freely transferable also. So you sell the duty entitlement passbook or DFRC, any profit can arise. You must have some import licenses. So those import licenses also you can sell. You get some duty drawback. You get some cash assistance for your export. All these are the incentives or the benefits which a businessman will get if he is doing export business. So in your export business, if you are getting such kind of benefits from the government, such type of incentives, they will also be treated as your PGBP income. Please remember this important point. So the first point is done. Second point is done. These incomes will not go to any other head except PGBP. Understanding? This will be taxable only under the head PGBP. Now next, if we go, point number 3, if you remember, we have already done perquisites in salaries. That time only I have discussed this point with you. Any personal benefit happening to a businessman or a professional in the course of his business or profession, that personal benefit, that perquisite will be taxable under the head PGBP only and not under the head salary, because that is not happening because of employer-employee relationship. See, if the personal benefit happens, perquisites you are getting in the course of your employment from your employer, then those perquisites will be taxable under the head salary. But if those personal benefits are happening in the course of doing your business or profession, it might be coming from your suppliers, it might be coming from your clients, it can be coming from anyone. But are these benefits of personal nature happening in the course of your business or profession? Yes. Then whether they are convertible in money or not, whether they are in cash or in kind, they are partly in cash, partly in kind, will not make any sense. It will be always taxable under the head PGBP. Convertible into money or not convertible into money, meaning what? Some benefit you are getting in the course of your business or profession, if that benefit gets converted into money, then also it is a perquisite taxable here. And if that benefit does not get converted into money, stays as a benefit only, then also it is a perquisite. For example, I am a professional, okay, I am a professional chartered accountant, and in the course of my CA practice, some clients are giving me some vouchers. If I want, I can encash these vouchers. I can surrender the vouchers and instead of that, I can get the money. So the personal benefit happening if I'm getting what? Vouchers. But am I getting the vouchers converted into money? Yes, they are convertible into money. So isn't it a benefit for me? Yes, I'll get the benefit and that benefit I'm converting into money. So the money which I'll get on their conversion is my PGBP income. Sometimes some benefits I will receive. Those benefits are not convertible into cash. I will have to take that benefit. For example, some client offered me 2 days, 3 nights holiday package in some Dubai hotel, which I cannot convert into money. I cannot say that give me the money against this. No, I have to take this benefit. So is this benefit of a personal nature? Yes, but is it convertible into money? No. Still it is my perquisite. Still it will be taxable under the head PGBP. Whatever will be the value of that benefit which I am getting, the fair market value, will be taxable for me under the head PGBP. I can get the perquisite in cash or I can get it in kind. And if I am getting it kind, I can convert it into money or they cannot be converted into money. Yes or no? They are partly convertible, partly in cash, partly in kind also. Will not make any difference. Are you getting any personal benefit in the course of your business or profession? Yes, that entire benefit will be treated as your PGBP income. That's it. Very important point. You have to remember this also. Okay. Now, next one. This point number 4 you can see. Don't write down. Don't write down. No need to write down. This point number 4 now. There will be one section 40 clause B. Which section? 40 clause B. Along with 40 clause B, I'm going to discuss this income there. So till that time, this specific income, I will not discuss. Because that time, it will not take me more than 5 minutes to explain this. Right now, I will have to give you the entire background. And still there are very less chances that you will understand 100%. Getting my point? So correct places in this chapter only, we are going to do one section 40 clause B. Along with 40 clause B, I will connect this part over there. Okay? Don't worry, I'll bring you to this part then. I'll tell you. See, we left one income in PGBP, specific charge. That income, come, let's see now. Then I will show you this part. Okay? Next one, point number 5. Don't write. No need to write point number 5 also. Why, sir? Because there will be one chapter known as income from other sources. After this chapter, we are going to complete capital gain. And after capital gain, we are going to start IFS, income from other sources. Under the income from other sources, we are going to discuss one income known as any sum received from Keyman insurance policy. See, some Keyman insurance policy came in your profit in lieu of salary also, if you remember. That time I told you that I am not going to discuss this part with salaries also. Why? Because the entire discussion which is for Keyman insurance policy is reserved for income from other sources. That time I will connect profit in lieu of salary also and this part also with the IFOS. Don't worry about that. Okay. Next one, point number 6. Don't see this right now. After point number 6, there are two more points. Okay, two more points. One is fair market value of stock in trade converted into capital asset. See, I will write down any amount which is received or receivable on transfer of asset, received or receivable in cash or in kind. Receivable in cash or in kind on transfer of asset whose actual cost was allowed under section 35 AD. So this income, no, this is also a specific type of income. Okay. So when I am going to do 35 AD, with 35 AD, I will be covering this income. This is also a specific type of income. Okay. Then there is one more income. They are saying that any fair market value of stock in trade which is converted into capital asset, stock in trade which is converted into capital asset as on the date of its conversion. This fair market value will also be treated as your PGBP income. See, so far we have covered only two incomes. One is compensation or other payments on termination or modification of various business contracts. Yes or no? Second, incentives received in the course of export business. Third one is perquisites received in the course of business or profession. These three incomes we have covered. Other than these three incomes, there are other incomes also, which are specific incomes, which are taxable under the head PGBP only. But all those incomes which we are going to cover, no, we are not going to discuss them right now. What I am going to do? I am going to cover those incomes at correct places where they should be discussed And that time I will tell you, see, this was also an income which was taxable as per specific charge, but we did not do it there. We are doing it right now. So all those incomes are, one income is this. See, 40 clause B, this income we'll be doing with 40B. This income we are going to do with income from other sources chapter. Then this income we are going to do just right now. Give me 2 minutes. Okay. Then this income we are going to do this income along with section 35 AD. Then this income, no, I will be doing capital gains chapter with you. There I will teach you a concept of conversion of capital asset into stock in trade. And the section will be 45 subsection 2. With section 45 subsection 2. With that section 45 2, no, which says that if a capital asset is converted into stock in trade, that time I will connect this point over there, because this is stock in trade converted into capital asset. So what will happen here? You will understand only if you understand what is happening there. So this will be connected. Okay. Other than these, no other incomes are specific incomes which you are supposed to study for your syllabus. Okay. Whatever incomes are there, we are going to cover each and every income. Don't worry about that. Sure. So now I'll be discussing that point number 6 with you right now. This point. Okay. So first of all, what I'll be doing, you are going to tell me the incomes covered under the specific charge of section 28. So those incomes which are covered under the specific charge of section 28. One is compensation or any other payment for a termination or modification of managing agent agreement. B. Termination or modification of agency contract. C. For vesting of management of any business or property to government or government corporation. And D. Termination or modification of any business contract. Next one was incentives received by assessee in export business. What are the incentives? Number 1, profit on sale of what? Import license. Profit on sale of DEPB. Profit on sale of DFRC. Then B, duty drawback. And C, cash assistance for exports. Yes or no? These things we have already covered. Next one is perquisites in the course of business or profession. whether these perquisites are convertible in money or not, whether they are in cash or in kind, or whether partly in cash and partly in kind. All these benefits will be covered under the PGBP head only. Okay. Next one to be done with 40 clause B. Next one to be done with human insurance concept under the head income from other sources. Next one to be done with section 35 AD under the head PGBP and under the head PGBP. Next one to be done with section 45 subsection 2 under the head capital gains. Right now? And now I am going to discuss one more income over here. Okay, one more income I am going to discuss. See, the income which we are going to discuss now, right now, that income is any sum received or receivable in kind, in cash or in kind, in cash or in kind for not doing any activity in relation to any business or profession, for not sharing know-how, formulas, patents, etc. So this is known as non-compete fees, and this we call as non-disclosure fees. Okay. See, if you are doing an activity in relation to business, by doing that activity, whatever income you will get, that is your PGBP income. But they are saying that not doing any activity in relation to a business or profession, and for that also if you are getting some income, that also will be your PGBP income. See how confusing these things are. They are saying if you do any activity which is a business or profession, from that activity whatever income you earn, that is definitely PGBP income. But not doing any activity in relation to business or profession will also give you PGBP income. See, I am running one business over here. Okay. For example, I am running a grocery store. So am I doing any business activity, professional activity? Yes. So from this grocery store, whatever income I am earning is my PGBP income. I am doing an activity which is known as business or profession. From that activity, whatever income I am earning, grocery store, whatever income I am earning, that is my PGBP income. But you also want to open one grocery store just opposite to my grocery store or just besides my grocery store. Will I like it? So I will come and tell you, don't do this activity nearby this area. For the next 10 years, go open your shop somewhere else in other city or other locality. But in this locality where I am having my business, if you are also opening the same business, so we both will fight. You will also not be able to earn. I will also not be able to earn. Hello. So do one thing, no, instead of coming into competition with me, starting a business or profession like me, don't start this business or profession nearby me for these many years. So you will say, no, 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 if I will do this activity, by doing this activity, I will earn PGBP income. Why would I stop myself to earn PGBP income? So I will say, how much PGBP income you are going to earn? By doing this activity, by opening a grocery store, within next 10 years, how much income you are going to earn? You say, sir, 10 lakh rupees I will earn. Take this 15 lakhs. Don't do this activity nearby. I have given you some amount. Any sum you are receiving or it is receivable by you. Either in cash you will receive or in kind you will receive. But this sum which you are receiving is for not doing any activity in relation to the same business which I am doing. So am I stopping you from competing with me? What if you would have competed with me? You would have started the activity. And by doing that activity, what type of income you would have earned? PGBP income, no? So to forego or to waive off that PGBP income, I am giving you this amount. And even this should be your PGBP income only, no? Do you remember? Do you understand this thing, everyone? So wait, for not earning that PGBP income for the next 10 years, I am stopping you to come in the competition. I'm stopping you that don't do this activity in relation to this business or profession. So if you accept that, you are going to lose your PGBP income which you are going to earn by doing this activity. So for that loss which will happen, you will not be able to earn that PGBP income. I am giving you some income in the form of non-compete fees. We will sign one agreement. That agreement will be non-compete agreement wherein you will write down that for the next 10 years, you will not open your shop nearby this area. Okay, how much you want? 15 lakhs. I will write down for this. For not doing this activity, I am going to give you 15 lakh rupees. See, these type of payments, no, will not be in lakhs. It will be in crores. I'll give you one example. This is a practical real life example I am going to give you. See, there is one big coaching class running their CA coaching business in Chennai. Okay. If these big coaching class, they are, teaching CA students. By teaching CA students, they are earning their PGBP income. Very famous name. Okay. Now, few of the faculties of that coaching class, they are leaving that organization. They are leaving that coaching class and they are starting their own coaching class nearby the same coaching class, same area. So the owner of that well-known coaching class, he is going to those faculties telling them not to open your coaching class nearby this area. Why we would not open by? Why we would, sacrifice our PGBP income which we are going to earn by opening a class? Just because you are running your class, you are earning PGBP income by teaching students, we should not earn. We should earn, no? So we are 3-4 faculties, we have started our own venture and we want to start the class over here, we will start. And by running that class, we are going to earn PGBP income. We are coming in your competition. Hello? That coaching class owner, no? The reputed coaching class owner, what he did? He called all of them, gave 1 crore rupees of check for the next 10 years. Don't start your coaching class in this area, locality. Everyone accepted that 1 CR. And now that well-known coaching class is monopoly. Students would have got some other good class. Getting my point? But students are not getting that good class. Why? Because the good class which was supposed to open did not open only. Because they accepted what? This non-compete fees. For that they had signed agreement. Non-compete agreement. Getting my point? This thing happens in almost every industry, I'll tell you. You must have heard about Mukesh Ambani, Anil Ambani. Have you heard? Two sons of Mr. Dhirubhai Ambani. When Dhirubhai Ambani died, no, he gave his telecommunication business to Anil. But Mukesh badly wanted to do telecommunication business. Reliance Communication. The name of the business was Reliance Communication. That was the very first company, telecommunication company, which was opened in India, which used to provide handsets and mobile connection in the beginning when telecommunication came to India, mobile connectivity came to India. And Reliance revolutionized entire telecommunication sector when it started offering calls, per minute calls at 1 rupee only. Outgoing, incoming, everything 1 rupee. Prior to that, it was 16 rupees outgoing and 8 rupees incoming. If somebody calls you and you pick up, no, you used to be charged 8 rupees and that party used to get charged 16 rupees because for him it was outgoing and for you it was incoming. So Reliance came with this thing that any call, 1 rupee. Right now we do it freely, no? All thanks to Reliance Jio. So that time Reliance Communication, which was started, that was the baby, that was the child of Mr. Dhirubhai Ambani. And Dhirubhai Ambani decided to hand over that Reliance Communication business to whom? Anil. But Mukesh was very determined that he wanted that business from his father. But unfortunately, he could not get it. Anil Ambani got it. And that time Mukesh requested also as a big brother to his younger brother that see, Appa has given you this business to you. I know. You are very smart. You will be able to scale this business. But I am your elder brother. I have started this business with my father. And I know that how to scale up the things. I know the vision of my father. My father wanted this company to be the global #1 company in telecommunication sector, which I can do it because I know the entire blueprint. If you want, you can take any of the business which father has given me. I can give you that refinery business also, petroleum business also. If you want, I can give you textile business also, polyester business also. Just give me that one business, telecommunication business. Anil was very adamant. And he became greedy also, that if my brother is ready to give away any of his business for this telecommunication business, then this business will be very lucrative. And I am also the son of that same father. No, if he can do, I can also do. I will make this company number one telecommunication company in the entire world. Right now, see where Reliance Communication is. You cannot even hear the names also. So that is the reason why Mukesh was asking. But see, both the brothers know they had a fight for this business. And that fight aggravated like anything, that Mukesh Ambani, his ego got hurt because Anil Ambani, spoke something bad to him. So his ego got hurt, and what he did, that okay, you are not going to give me this business, no, telecommunication business. Don't worry. Immediately within a month, one new company was formed. New telecommunication company was formed by Mukesh. And that name of the company was Reliance Jio. That was formed back then when Dhirubhai Ambani died. That time only that company got registered. And Mukesh Ambani started the process of applying for spectrums and all to get telecommunication license and everything. Okay. He started the process that time only. And if he was not stopped at that time, no, he would have started Reliance Jio back then in 2003 or 4 only. But if he would have started his telecommunication business, then he would have entered in the competition with the telecommunication business, Reliance Communication Business, his own brother's company. And both these brothers will fight. And Vodafone, who already entered into Indian market that time. Bharti Airtel was also growing very fast. So these two will go ahead and these two brothers will keep on fighting. Their mother was very smart, Mrs. Kokila Ben. Okay, she, brought both the brothers on table and got them sign one agreement, this non-compete agreement, where she told Mukesh to promise that he is not going to start any activity of Reliance Jio for the next 10 years. In the telecommunication business, you are not going to enter for the next 10 years. Let your brother run Reliance Communication. Let him scale this company. Otherwise, you both brothers will fight. Third party will go ahead. Immediately an agreement was signed. But in return, the mother said that if he is not going to do this activity, he is going to lose the business income which he could have earned by starting this business. So in that agreement, it was written that in return, Anil Ambani will pay 5,000 crores to Mukesh Ambani for not starting an activity in relation to this business. That 5,000 crores, my dear friends, was the income of Mr. Mukesh Ambani, taxable under the head PGBP because of this point, because of this clause. Just imagine a small specific charge. Because of that, entire 5,000 crore got taxed in his hands. 30% tax on that. 1,500 crores of tax revenue government received just by this one income. Understanding what I am trying to tell you? That 1 crore rupees paid to those 3 professors who were competing with that big class. 1 crore they are earning for them, for those professors, that is this income, PGBP income. Government would have definitely got 30 lakh tax on all those incomes. Getting my point? So this is the income which is written. This clause is very famous. 28 clause 5 is clause 5 income. Getting my point? Now this was non-compete fees. See, not doing any activity in relation to any business or profession, there are certain exceptions also. 2 exceptions. 2 exceptions. If that income is already taxed under the head capital gain, then no need to bring that income here under PGBP head as non-compete fees. Because sometimes, see, you have a right to do a business or right to do a profession. That right you are having. And because of that right, you are doing some business or profession. You transferred that right only to someone. Transferring the right means transferring the capital asset. And for that, whatever money you will get, that will be taxed under the head capital gains only. But when you will transfer that right to do a business, when you will transfer the right to do a profession, that means you will stop yourself from doing that business or profession. Yes or no? So are you going to do an activity of that business or profession anymore? No. You will not do the activity of that business or profession anymore whose right you had, but you sold that right to someone. By selling that right, you abstain yourself by doing activity in relation to this business or profession. But for that, whatever amount you have got, that cannot be treated non-compete fees here, because that is already taxed under the head capital gain, because that is the consideration which you are receiving for transfer of your right. And as a result of that, you are not going to do this activity anymore. Hello, sir. So will that income be already taxed? Would that income be already taxed under the head capital gain? Yes. So now no need to bring that income again here under the head capital gain. No need to make that income your non-compete fees. Getting my point? Ignore it. Ignore it in PGBP, because that is already getting taxed under the head capital gains. Sure. Sometimes any compensation is received from multilateral fund of United Nations, which was that multilateral fund was formed as a result of Montreal Protocol of United Nations. Now what is this? If you are getting some amount and that amount is coming to you from the multilateral fund of the United Nations, and that multilateral fund was formed as a result of Montreal Protocol of United Nations. Now to explain you this thing, no, I will have to take you back in the past. In 1971, 70s, if I'm not wrong, United Nations convened a meeting. Now United Nations is an international body. That body takes care of, that body discusses all those things which generally affects the entire world. All the countries of the world are affected by some things, some matters, subject matters. For those subject matters, all the countries in the world have a common body known as United Nations. For example, terrorism. Terrorism is not going to affect a single nation. It is going to affect the entire world, all the nations. So with regard to terrorism, what steps should be taken? How that terrorism should be countered? Okay, because that is not a national phenomenon, that is an international phenomenon. Okay, so those things which affect the entire world, meaning all the nations of the world, for those things the discussions happen in this body. This is a collective body of all the nations, where all the nations are the members of this body. Now what happens, that whenever some issue comes, that issue is discussed in the United Nations, that issue will be such issue which will affect the entire world, all the nations. So a meeting is called of the United Nations to discuss about those issues and to bring out some solutions for those issues. Yes or no? So whenever the meeting of the United Nations are convened, those meetings are not known as meetings, they are known as summits. SUMMITS, summits. Okay. Summit is nothing but meeting only. United Nations meeting. That is known as summit. So one summit happened in Montreal, South America or Canada, something like that. Okay, no? So Montreal is a place there that summit happened. Right now, no, in 1970s, That time a meeting was called there. In that meeting, a very important discussion was happening. A very alarming issue was being addressed in that summit in Montreal. And what was that issue, Global warming. And global warming is happening because of one very big reason, that the temperature of the earth is rising. Why the temperature of the earth is rising? Because earlier the sun rays were not penetrating into our environment that much, which they are penetrating now. And why it is happening? Because the ozone layer which is covering the earth, that is a protective layer around the earth, which protects the earth from the ultraviolet rays of the sun. See what happens when the sun rays are coming from high above, that sun rays cannot penetrate that ozone layer. The ultraviolet rays will be reflected back. So that acts as a protective layer. What? Ozone layer. From outside, that layer is intact. But from inside only, we are affecting that layer. See, if this is earth, okay, and this is ozone layer surrounding it, ozone layer, and here it is a sun, okay. So whenever the sun rays are falling, they are getting reflected. Outside everything okay, but from inside only, we are affecting that layer so badly that that layer is depleting, that is becoming thinner and thinner. And how from inside we are affecting it? We are bloody running so many industries now. Because of the industrial revolution happened in the last 100 years. Okay, what happened? The carbon house gases like carbon monoxide, carbon dioxide, and all such gases, their emission is so high that they are directly affecting the ozone layer. Not from outside, but from inside. So the layer is depleting slowly and gradually, and the layer is becoming so thin that there are places where it is so thin that ultraviolet rays are about to pass only. If we don't do anything about this now. See, the scientists came to this conclusion. This research happened because of thing that earthquakes started rising. Glaciers started melting. Sea levels started coming up. Cyclones, the frequency of the cyclones increased. So all the natural calamities started happening very fast, very frequent, So it was alarming for all the entire world, that earlier these things used to happen very, rarely. But now these things are very common. Every now and then something or that happening. And why this is happening? What is the reason why this is happening on the earth now? So scientists, they started researching and they came to this conclusion that it is all because of one reason, that is global warming. And global warming is happening because sun rays are about to now penetrate in the Earth's environment. And why they are entering? Because the ozone layer has started depleting. And what is the reason for ozone layer to deplete? It is not depleting from outside. Humans are only depleting that. Because we have started so many factories, so many industries. So many industries are so many processes which, emits those carbon house gases in abundance. And those carbon house gases ultimately affects that ozone layer. Because of that, it is becoming thinner and thinner day by day. And if nothing is done to stop that, what will happen? That ozone layer will deplete completely. So the natural cover around the earth, which protects us from the ultraviolet rays, that will be gone. And directly the sun rays and its ultraviolet rays will now directly penetrate. The earth will be gone. For what reason we are doing all these things? For our future generations only, we are making all these things, no? But there will be no earth only. There will be no future generations only to enjoy all these things. We have to do something to stop this thing to happen. So every member country in that summit, present voted that we are going to reduce the global warming by stopping these type of harmful or dangerous processes and industries to operate in our country, which are emitting such gases, because of which what is happening? The ozone layer is depleting. Getting my point? So India is one of the members of United Nations, you know, na? India also promised that okay, we will also stop our industries, those industries which are emitting such kind of gases and all. But to stop them, no, we will have to compensate the industrialists, because we only have given them what? Permissions to start these kind of industries. And to pay them the compensation, we are not. We are third world countries. 1970s, India was a very developing nation. It was not on the stage of development also. It was about to see the development. Right now, we are at a stage where we can say that we are developing, and we are the fourth largest economy in the world. We have surpassed Japan also. But that time, just imagine that time what India was. It was nothing in front of all the other, big countries like US, Canada, Germany, Italy and all. So we would stop in our country, but we have only given the licenses to the industries to set up these kind of processes, to set up these kind of industries. And now if we will tell them to stop, they are going to ask the compensation. From where do we give them the compensation for not doing this business? So all the big member countries, like USA, Canada, Russia, Japan, who have ample amount of money, yes or no? They created one fund, and the name of that fund was multilateral fund. What fund? Multilateral fund. In this fund, all the big countries who are very rich and powerful countries, they contributed huge amounts in these funds. So that now the money lying in this fund can be utilized to pay those industrialists who are doing these activities and who are going to stop their activities. Getting my point? So are you an assessee? Yes. Were you doing any such activity? Yes. So you were told to stop that activity, not to do that type of business activity, okay, which is emitting such kind of harmful gases. And now you will stop it. So you will be compensated. You will get the money for not doing an activity in relation to that business. That money which you are getting, is not non-compete fees. Don't charge it here. Okay. Exception. Completely ignore. Not your income. Fully exempt. Activity stop. Many industries have closed down, Kani. Many industries have closed. Not in India. Around the globe. Because certain processes are so harmful that they are emitting such kind of, gases, which is very bad, very bad. So many industries, many companies, they are stopped very long back. That time even I was not born. That time only. I have not heard the names also of such companies now. Forget about you. So this provision is very old provision. Okay, no? So whenever the government will give you money, it will give you through this funds only, multilateral fund. And as an assessee, you are getting this money for not doing any activity in relation to that business. Yes or no? So will it be treated as your non-compete fees? The answer is no. It will not be treated as your non-compete fees. Don't bring it here. Everyone. Understanding? Now coming to not sharing. Not sharing any know-how, formulas, patents, etc. This is non-disclosure. In the course of business or profession, you have some knowledge, you have some formula, you have some technical knowledge, and I am telling you not to share that know-how, not to share that formula with anyone else, which you are sharing with me. Don't disclose. Sign this non-disclosure agreement. I'll give you some money for this. So to understand this better way, I'll give you one example. Have you heard about Bharat Biotech? See, in COVID times now, there were two companies, Indian companies, who came up with the vaccines, formula of the vaccine. One was Adar Poonawala's Serum Institute of India, and second was Bharat Biotech, which came up with the vaccine known as Covaxin. You might have heard about this. Many of us would have got the shots of Covaxin also. So that Covaxin was the vaccine which was developed by, research was done by Bharat Biotech. Yes or no? One was Covishield. Covishield was Serum Institute of India. Okay. So I am talking about Bharat Biotech. Let's see. Bharat Biotech. What is the business of Bharat Biotech? Bharat Biotech is a company involved in scientific research and development. What is their business? To find out new things, new formulas of medicines, etc. New vaccines, new formulations, new medicines for some of the diseases which have not yet come, or some of the diseases which are already there but don't have that medicines of that kind to cure them. Cancer, they are doing some research, and all of a sudden they crack a formula. They created a vaccine for cancer. Now one shot, cancer is gone. Possible? Scientists are working for that. COVID came. In COVID, they found out the formula for Covishield vaccine. One shot you take, for the entire life, you will be immune from what? From COVID virus. So that Bharat Biotech now, what Bharat Biotech did, I'll tell you. Bharat Biotech, they developed one formula. Okay, formula means vaccine formula. Okay, no? And now, developing that formula they have registered on their name. Patent they took. So whenever I invent something new, which is my creation, I don't want anyone to take the commercial advantage of that thing. I don't want anyone to copy that. I don't want anyone to steal that thing from me. It belongs to me. I can commercially exploit that formula. So to get that thing, I need to register my formula. I need to register a patent for that. Patent is an evidence that I am the true inventor, true and first inventor of this thing. Okay. So I took the patent. Okay. Now this patent which I have taken now, if somebody wants to use this formula and make such vaccines, I am ready to share my formula with you. Come take this formula. I am ready to disclose this formula. Until then it is top secret. I will not tell anyone right now. But if you want, I can share this formula with you. You take this formula. By using this formula, you manufacture vaccines in huge quantities, sell and earn profits. And from that profit, give me some royalty also. Getting my point? Now, who will come to buy this formula from Bharat Biotech? Come on, tell me. Big pharma companies will come. For example, Cipla is there. Okay, no? So, Cipla came. Cipla Limited came, and this patent was given to Cipla for use. Meaning the formula was disclosed or shared with Cipla. Now, for the next 5 years, take this formula, use this formula, manufacture the vaccines, sell the vaccines, and earn huge profits. Cipla became very happy that now Cipla has the formula to cure what? To give the immunity, to manufacture a vaccine for what? COVID. Now Cipla will start manufacturing in huge quantities, keep on selling, and it will earn huge profits. And from those huge profits, they will give a very decent share, a huge amount to Bharat Biotech as what? For use of that formula, they will be giving money to Bharat Biotech in the form of what? Royalty. Now for Bharat Biotech, no, this royalty is their PGBP income because their business is to invent, allow the use, and earn the income in the form of royalty. So this royalty for Bharat Biotech is a PGBP income. Now tell me, to increase this PGBP income, royalty income, what Bharat Biotech can do? Like it has given the formula to be used by Cipla, the same formula can be given to Sun Pharma also. The same formula can be given to Dr. Reddy's laboratory also. Other pharma companies, Bharat Biotech is, free to share this formula with anyone. We are sharing with you right now. You manufacture and sell. And we are going to share this formula with Sun Pharma also. Sun Pharma will also manufacture and sell. Sun Pharma will also give us royalty. We are getting double royalty. Hello, sir. Why would we stop ourselves from not sharing this formula, not disclosing this formula to some other company? Cipla will not be happy. Cipla will say, yo, if you'll share this formula with Sun Pharma, now Sun Pharma will also produce the same vaccine using the same formula, but in the different brand name with a very less price as compared to us. So our market share will become half because some other party will also start selling. And what if they are selling at a cheaper cost than us? Our sales will come down, our business profits will come down. No. So Cipla will never want that Bharat Biotech to share this formula or disclose this formula with any other pharma company. The time when you'll give the patent or the formula to Cipla, no, that time only Cipla will tell you to sign non-disclosure agreement. Non-disclosure agreement. Sign this agreement. Promise us that you are not going to disclose this formula to any other pharma company which you are sharing with me. For the next 5 years, we will be exclusively using. And for the next 5 years, you are not supposed to share this formula to anyone. Bharat Biotech will say, no, we will share 100%. Why do we sign this non-disclosure agreement with you? If we sign it, meaning we will have to sacrifice our PGBP income, no, royalty income, which we would have earned by sharing this formula to someone else. How much income you would have earned by sharing this formula to Sun Pharma? How much you would have earned? 1 crore. Take 2 crores. Sign the agreement and don't share the formula. What Bharat Biotech is getting right now? They are getting any sum, received or receivable, in cash or in kind, for not sharing any know-how, any patent, any copyright, etc. So for Bharat Biotech, whatever amount will come by through this non-disclosure agreement as what? As an income, even this income will be treated as PGBP income for Bharat Biotech. Got it, everyone? Sure. This is the end of specific charge. I hope you understood. Sure. So these are the incomes. Okay. Now first income, you all can see this we have done, this we have done, this we have done. We are yet to complete these incomes. 1, 2, 3, 4. These 4 incomes we are supposed to do later on. Okay. At relevant places. Now specific charge is over. After specific charge, we are supposed to go to section 29. Because 28 is over, we are supposed to go to 29. That how to compute PGBP income. But wait, before doing that, there are certain misconceptions which we have to clear. What are the misconceptions, sir? First one, pay attention. Assessee is there. Assessee can be any person, right? No? Now this assessee has some shares. Okay. Now these shares which the assessee is having, these shares can be held by him as the stock in trade of his business, or it can be held as his investment, meaning capital asset. So you can hold it as what? Stock in trade also. You can hold the shares as capital asset also. Now, if you are in the business of buying and selling the shares, hello. So for you, the shares are your stock in trade. See, if I'm in the business of buying and selling of footwear, for me, my footwear is my stock in trade, no? If I'm buying and selling stationery, for me, stationery will be my stock in trade, no? If I'm buying and selling some products, those products are my stock in trade, no? But now I'm buying and selling the shares. So for me, my product which I'm buying and selling is what? Shares only. So for me, in my business, share trading business, shares are my stock in trade. So by selling my stock in trade, the stock in trade which I have bought, when I sell that stock in trade, whatever income will be there, that is my PGBP income, no? Yes or no? Now, if the shares are held by me as what? Capital asset, and I'm selling the shares. I've sold the shares, which I'm holding as capital asset. See, now I'm not in the business of what? Buying and selling the shares. I have some extra money that I have invested in some shares. Why? Because if I invest this money in the shares, no, the value of the shares will grow, my investment will grow. I am not interested in buying and selling and making the profit. I am interested in increasing my investment, increase in my worth. So I've invested that money in the shares as what? Investment. Nothing but those shares are held by me not for trading purpose, as my investment purpose. These shares are my capital assets. Now whenever I sell the capital asset, the resulting income is always taxable under the head capital gain. Transfer of capital asset will result into capital gain. Sale of stock will result in PGBP income. Sale of capital asset will result into capital gains income. Yes or no? Now tell me, if they are sold, then you are going to get PGBP or capital gain. But till the time you are not selling, you are holding them, no? Till the time you are not selling, you are holding them, and that is the reason why you are known as shareholder, because you are holding them. If you are selling them, you are no more the holder. Someone else becomes the holder. Yes or no? But till the time you are not selling, you are only the shareholder. So in the capacity of the shareholder, no, sometimes you get what? Dividend also. Dividend on as what? As shareholder. Now the question arises, the dividend on those shares which you are holding as what? Stock in trade. Will it be PGBP? The dividend on those shares which you are holding as capital asset, will it be capital gains? The dividend income on the of the shareholder, the dividend income which the shareholder is earning, the dividend is on what? On shares only, no? And if the shares are held as what? As stock in trade, If the shares are held as capital asset, on the stock in trade shares also you are getting dividend. On these shares held as capital asset, you are getting what? Dividend. So my question is, the shares which you are holding as stock in trade, on those shares if you are getting the dividend, will you charge that dividend under PGBP, saying that this is income taxable under this head? Or under any other head? Which head you will charge? Come on, tell me. Will you charge this under the capital gains head or under any other head? This will also go to IFOS, and this will also go to IFOS always. Why always? Because specific charge under section 56 subsection 2 under the head IFOS is there. As per this specific charge given under 56.2 under IFOS, it is clearly mentioned that whatever dividend income will come on whatever type of shares, that dividend income will always and always be taxable under the head IFOS. So if there is a specific head charging this income specifically under that head, so that income has to be charged under that head only. Even if the shares are held as stock in trade, on those shares, whatever dividend you are getting, that dividend you cannot charge under PGBP or any other head, only IFOS. Even if the shares are held as your capital asset, still the dividend on those shares will be chargeable under the head IFOS, because there is a specific charge. See, the incomes which are covered under the specific charge under PGBP, will you charge those incomes under other heads? No, they are to be charged under PGBP only. So likewise, if the incomes are covered under the specific charge of IFOS, those incomes are to be covered under IFOS only. They cannot be charged under any other heads. And dividend is one of such incomes. The dividend is income specifically chargeable under the head IFOS. Now it is not mentioned that the dividend should be on those shares which are held as capital asset and not stock in trade. Any dividend on any type of shares will always be taxable under the head IFOS. Whether the shares are held as stock in trade or they are held as capital asset will not make any difference. So on the stock in trade shares, the dividend income can never be PGBP. It will always be IFOS. On capital asset, the dividend income can never be capital gain. It will always be IFOS. PGBP and capital gain will arise only if these shares are sold. Sold as stock in trade, then PGBP. Sold as capital asset, then capital gain. But till the time they are not sold, you are holding these shares. Whatever dividend income you are going to get on these shares will always be taxable under the head IFOS. One misconception cleared. So if ever you see dividend, now will you remember what is the tax treatment to be given? Sure, everyone? Should I move ahead? This was one income. Now second income. Come on. There is one property. Okay. Now property is held as stock in trade. I will not say anything about this because I have told everything about this while we were doing house property head. I have only taught you. You have studied from me only. You might not remember. I remember everything. But I've already discussed this part under the house property head. What is to be done? Even if the property is held as stock in trade, if the property is let out and any rental income arising from this property, that rental income will never go to PGBP head that will always come to income from house property head. Yes or no? I've already told you this. Sure, no? But one more thing I had discussed over there. What if the assessee is having a business of letting out properties? So, business of letting out the property. So now letting out the property will be done and rental income will be earned. Now this rental income will be taxable under PGBP or IFOS, or house property. Now your business is only to let out the properties. Come on. So from this business, whatever income will come will be rental income only. No, has to be your PGBP, guys. Even if it is coming by letting out what? House property. Still this will not be taxable under the house property head. It will be taxable under the PGBP head. Because your main business is to let out the properties on rent and earning the rental income. Got it? Supreme Court judgment. Chennai Properties and Investments Private Limited. But there is one amendment here which I have told you. If letting out of the property is your business, then rental income will be taxable under PGBP head. But let us clear one thing. If the properties which are let out are of residential nature, then even though your business is to let out the properties, Supreme Court judgment will not be applicable. Now there is an amendment. Explanation 3 to section 28 is inserted, and as per that explanation, rental income from business of letting out residential house properties will not be taxable under PGBP head. Meaning, now you will have to see that the properties which are being let out in your business of letting out the property, in that business, whatever properties you are letting out, now you are supposed to see that the properties let out are residential properties or commercial properties. If your business is to let out the properties, so in your business, whatever properties are let out, if those properties are residential in nature, then the rental income from those property will go to house property, cannot come under PGBP head. Explanation 3. So rental income will come from which properties? Come on, tell me. From residential property. This will never come to PGBP. This will always go to income from house property. Yes or no? This is explanation number 3 to section 28, and this is newly inserted by Finance Act 2024. You have to remember. This is the amendment. Earlier, what used to happen, Earlier, any type of property, if your business is letting out the properties and earning the rental income, no, that entire rent used to be taxed under PGBP head because of that Supreme Court judgment. But now that Supreme Court judgment will not apply on the rental income of these type of properties. That will apply on rental income of commercial properties now. So if the rental income is coming from commercial property, that means your business is to let out what? Commercial properties. And by letting out these commercial properties, whatever rental income you are getting, don't charge under house property. Bring it here, PGBP, because this is your main business. Getting my point? So this will not be taxable under income from house property. This will always be taxed under PGBP. House property will not come here. Sure? Understood, no? So this was one more misconception which you have to clear. Don't charge income of PGBP under the house property head, or don't charge house property income under PGBP. and don't charge those incomes which are specifically covered under other heads, under the PGBP head. Getting my point? Now I will give you one or two more examples. Okay. So that it becomes crystal clear that which incomes will come under this head and which incomes will not come. Sure. Now pay attention here. There is one activity. Assessee can be any person. He is doing an activity. What type of activity? Of owning and maintaining race horses. What did I say? Owning and maintaining race horses. Hello? Pay attention, huh? What is this? Race horses, no? Hello? What is this? And what is this? And what is this? Both are same, huh? Horse races, race horses means they're talking about animal. You are having an activity of owning and maintaining these type of animals. Meaning, owning and maintaining race horse, meaning that you are having a stud farm, also known as stable, where you are rearing such type of horses. And wait, in the stud farm, you will bring different horses of different breeds. Some are Arabian horses, some are Mongolian horses, some are Indian horses, some are the horses from England. All those horses, when they are small, when they are studs, that time they are brought in your stable, your stud farm. They will be fed, training will be given to them, they will be taken care of, okay? And they will be trained to participate in races. See, I am not running a dairy, okay, where I'll milk the cow, take the milk, sell the milk and milk products. This is not something which is regular. This is something which will ultimately promote gambling. This activity in future is going to promote gambling because these horses are getting ready for races. The public will come and they will bet on your races, bet on your horses. So this activity is ultimately going to promote the betting, gambling, etc. This activity itself is not betting or gambling. There will be no winning or losing in this activity. Getting my point? There is no winning or losing. This is an activity of owning and maintaining resource. That's it. But can this activity also give you some income? From this activity also of owning and maintaining racehorse, from this activity, can you earn some income? What type of income you earn? See, the horses which are there in your stud farm, whom you will prepare to participate in races, once they are prepared and once they will participate in race, no, many people will bet on your horses. So for example, 10,000 people came to watch the race. And out of those 10,000 people, few people will put their money on your horse. No, they will bet their money on your horse. No. So whatever money during that race, all the public present and watching that race, whatever money they have put on your money, they have put a bet on your horse, that is known as stake money. If your horse comes on first, second or third positions, no, that race organizer who has collected that stake money which was bet on your horse, out of that stake money he will give you some share, very huge amount, very decent amount. See, all the people present know who has put a bet on your horse. Total bet on your horse was 25 crores. How much? 25 crores. If your horse wins, out of 25 crores, 5 crores will be given to you. That 5 crores is nothing but the part of stake money given by the organizer to you. And that is your income from this activity. Are you going to get that income every now and then, again and again, again and again? Or only when your horses will win? Only when your horses will stand on first, second, third positions. Yes or no? So, it is not necessary that you are always going to get income out of this activity. There are probabilities, possibilities involved. Even after putting efforts, there is a probability. There is a possibility. Income may or may not happen. That is based on the luck. Luck factor is involved here. That whether you are going to get income or not. Yes or no? Even if you train your horse really well, still luck is involved. You are going to win only if other horses are not better than yours. But that is not the case. They might be better than you. Hello? You are going to earn only if other horses are, your horse is better than other horses. What if other horses are better than your horse? You're not going to get income. So this activity might give income, might not. Even after putting efforts, there is a luck factor which is involved. Yes or no? And ultimately this activity is going to promote betting and gambling, etc. So under the Income Tax Act, this activity is not treated as a business or profession. You cannot call this activity business or profession. Because in business or profession, luck factor is not there. The more efforts you will put, the more labor you will do, the more returns you will get, the more profits you will get. But here there is no guarantee. Even after not putting any efforts, your horse can come first. Hello? Even if he is not trained properly, still your horse can become first. And ultimately this activity in future is going to promote what? Betting, gambling, etc. So we are not going to consider this activity as business or profession. Even if you are considering this activity as your business, under the Income Tax Act, our Income Tax Act does not consider this activity as business or profession. So whatever income which will come out of this activity cannot be taxed under PGBP, because this activity which is giving you this income, this activity itself is not considered as business or profession. Getting my point? So tell me, is this activity treated as business or profession? No. So whatever income which is coming from this activity, what income will come? Come on, tell me, what income will come? Stake money. The horses will participate in the race, and in that race, whenever your horse will participate, people will put the money that is known as stake. Out of that stake money, the race organizer will give you some money. That is your part of stake money. Yes or no? So that income will always be taxable under the head IFOS. What will be the income? Come on, tell me. Income will be stake money. Now tell me, to earn this stake money, to earn this income will now be taxable under the head IFOS. But to earn this income, you might have incurred many expenses like training the horses, feeding them, running the entire stud farm, this much big setup. Okay, trainers will come, you will give the salary to the trainers. The horses, you will have to maintain these horses. There is a huge cost on their maintenance also. You have to keep your horses looking handsome. So their grooming, etc. is done. You might have seen in Discovery Channel or National Geographic that in these kind of stud farms, no, the owners spend huge money to make their horses attractive also. They will feed them, they will make them attractive, their hairs will be cut in such a fashion, such a manner that your horse will look different from other horses, their hair will be colored, their skin hair will be trimmed also. There are many things which has to be done. All these expenses are bound to happen under these activities. So if you are doing this type of activity, expenses are bound to happen. So those expenses will be allowed as a deduction under the head IFOS, because those expenses are incurred to earn this income, no? So out of the income which you are earning, those expenses will be allowed as a deduction. So the deduction will be available under IFOS head from this income under section 57. So deduction for related expenses, that is given under section 57. So IFOS, under the head IFOS, the deduction is available under section 57 and the income will be taxable under the head IFOS. So the net amount will be finally taxable as your income under the head IFOS from this activity. Getting my point? Now tell me, what are the chances to have a positive income over here? Bright chance or very less chance? Very less chance. Because the expenses on this activity are continuously happening. Every year the expenses will happen and huge expenses will happen. But there is no guarantee of this income. In some year income will come, but that might not be equal to or more than the expense. That might be very less. Or in some years stake money will not come only because your horses have not participated only. Or even if your horses have participated, they have not won any race yet. So stake money for that year will become zero, but the expense for that year will be allowed as a deduction. Loss will come. Hello? These type of activities, no. Majority of the cases, luck is involved. You are going to get loss only. Hello, sir. Getting my point? Now tell me, whenever this activity has a greater income as compared to the deduction for related expense, that time only the taxable income will be shown under the head IFOS. Till then, every year loss, loss, loss. Why? Because income is very less or no income, but the expenses are happening every year. Expenses cannot be stopped, no? Understood, no? Sure, no? Paka? Okay. This is person activity of owning and maintaining race horses. Now, what if there is another person? This is assessee. He can be any person. Now, assessee is doing an activity which is known as casual activity. What type of activity, friends? Casual activity. Now, what is the meaning of this casual activity? Any activity where there is a chance, there is a luck, there is a chance of either winning or losing. Either you win or you lose. Only these two possibilities are there. No other possibility. Either you win or you lose. Like example, give me example. Card games you play. You can win also, you can lose also. If you lose, there is a loss. If you win, money comes, income. Hello? Lottery. You have taken a lottery ticket. If the number of your lottery ticket is there, you win. And if some other number comes, then you lose. Your money goes. Card games there. TV game shows are also there. Like Khatro Ke Khiladi. Have you heard about it? Khatro Ke Khiladi, Fear Factor. All these game shows are there. Crossword puzzles are there. KBC is there. Kaun Banega Karodpati. Okay. So these are TV game shows. Crossword puzzles are there. There are other games also. Betting also there. Horse race is there. Now race horse? No, 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 no. Now horse race is there. Other animal races are there. Yes or no? So in those races, you are betting, you are gambling. So from betting, gambling, what happens? See, normally these type of activities, no, why we call these activities as casual activities? People get themselves involved in these type of activities just to entertain themselves. These are not the activities normally done by the people to run their households. Somebody might be doing this activity to run their household. There are people, mad people in India also. That what do you do for living? I'm a gambler. You can find these kind of people also who run their household on these type of incomes only. But how many such people you will see? Hardly one or two people out of thousands of people. Yes or no? So for those people, if we consider PGBP, so for everyone else also we'll have to consider this activity as business, no? Hello? So it is immaterial whether these activities which you do on a casual basis, usually the activities which are done on a casual basis, giving you what? Giving you a chance of winning or losing. If these activities are done regularly or irregularly, will not make any difference. This activity can never be treated as your business or profession. Even this activity is never treated as what? Business or profession. So whatever income will arise from this activity, that is going to arise when you win only. Hello? So on winning only, the income will arise. So that income which is happening as a result of win in this activity is known as your winnings income. Which income? Winnings income. Some horse race was happening. You went to see that horse race. Have you seen any race course? Have you seen horse races inside the race course? Sure. Many horses are there. All those horses will stand in a queue. The small doors are there which will be shut. Okay. And there is a huge race course, long race course. 10 horses are running. And people will be standing outside. Everyone will be having binoculars. Everyone will be standing there watching that, okay, this horse is also running, this horse is, and the announcers will be announcing that, see, number one, this horse is there, jockey name is this horse has participated in these many races, out of these many races he has won these many races. So likewise for every horse the announcement will be done. So it will be done before the start of that race, so that people who have come to watch that race, no, you are one of them, you have gone to watch that race. Now if you go there, there will be a counter outside that race arena. There will be a counter. On that counter, the names of the different horses will be written along with their jockey names. Yes or no? And it will be written, the rates will be written. If you want to bet on this horse, this much amount you bet, and if this horse wins, you get in return this much amount. If number 2 horse, if you put your money here, if this horse wins, you are going to get 10,000. If you put 1,000, you are going to get 10,000. Likewise, for every horse, there will be some rates. Rates of betting, that how much you put, and if this horse wins, how much you get in return. That is the money which you are betting on that horse. Meaning you are an assessee, you are doing a casual activity of betting in horse races. Now what is the outcome? Either the horse wins or horse lose. As a result of that, you lose your money or you win some income. Yes or no? So whatever money which you are going to get on winning, that is your winnings income. Lottery, winnings income. TV game shows, winnings income. Crossword puzzles, winnings income. Whether you do this activity once, twice, regularly, we don't care. This activity can never be treated as your business or profession. This activity never be treated as your income. So whatever income coming from this activity known as winning income shall always be taxable under the head income from other sources. There is a specific charge under section 56(2). There is no specific charge on this income, guys. Owning and maintaining racehorse, from this activity, whatever income is happening, that will be taxable under the head IFRS, because there is no other head under which it can be taxed. So as per the general charge of IFRS head, it will be taxable there. Because this income cannot be taxed under salary. It cannot be taxed under house property. It cannot be taxed under PGBP also, because this activity is not treated as business or profession. You are not selling any asset that this income should be taxed under capital gain. So all the four heads, the income cannot be classified, and this income is taxable also. So which head remains? IFRS, no? So as per general charge this income under the head IFRS. As per general charge, it is being taxable over there. If income is there, it is taxable income, it is not getting charged under any of the four heads, then that income will be charged under IFRS, general charge under IFRS head. But there are certain specific incomes which will be covered only and only under IFRS. 56(2), dividend will always be taxable under IFRS. Winnings income will always be taxable under IFRS. Even if you do this activity on a regular basis or irregular basis, even if this activity for you might be considering this activity to be your bread and butter, we don't care. This activity for us is not a business only, not a profession only. Whatever income you are getting, that will be winnings income. Whether this income is received once, twice or multiple times, we don't care. This income will be winnings income, will always be taxable under the head IFRS. And on this income, the rate of tax will be 30%. This is given under section 115 BB. Now this income will be taxable under the head IFRS, but the rate of tax on this income will always be 30%. It is given in 115 BB. See, if online gaming is there, you are getting income from online gaming. Right now, Dream 11 is there, MPL is there, Rummy Circle is there, Jungly Rummy is there. You might have heard about these online money gaming apps, no? Winzo is there, you play carom, you play different. My 11 Circle is also there. Kaushik is very active in all these things. Sir, you are also speaking, no? So you must be, see, I am speaking, I have to learn about these things because I have to teach you. Okay? So, these type of online gamings are there, no? Online gaming. From these online games also, you can either win or you lose. So these online games also gives you winnings income. Even that winnings income, specific charge, taxable under the head IFRS. But on that winnings income, how much tax you will pay? 30% only, and that is given in 115 BBJ. There is one section 115 BBJ which says that winnings from online money games, winnings from online money games will be taxable under 115 BBJ, but at the flat rate of 30%. So what about other winnings? Other winnings incomes are also taxable under the head IFRS only. At what rate? Flat 30%. So either you are getting winnings from online money games or otherwise. Those winnings will also be always be taxable under IFOS, but the rate of tax on that winning will be 30%. Will you remember this? But wait. These winnings will happen frequently or sometimes. Sometimes only, no? In your entire life, you never earned winnings income. This is the first year in which you are earning winnings income. Now, is it a guarantee that in every year from now onwards you will earn this income? Or maybe never. Maybe never. So this is the first time in your life in this year you have earned winnings income. And the government wants to charge tax on that income. How much? 30%. Just imagine if they allow you to take the deduction for the expenses out of this winning income. If they allow you the losses which got incurred in these casual activities, you are putting money, gambling money every time you are losing. Hello, adjust this amount from winnings. Will there be any amount left after adjusting? No amount will be left only. Cost of lottery tickets, cost of tickets bought to bet on the horse, money which you are betting on the horse to bet that money you will have to buy the tickets, no? So cost of lottery tickets, cost of earning this income, expenses only. Are you going to get the deduction for those expenses? Just imagine if those expenses and losses incurred in the course of casual activities, if they are also allowed from winnings income. Winnings income 1 lakh. But the losses incurred, expenses and everything incurred, 10 lakhs. Allowed as a deduction, entire 1 lakh gone. Still 9 lakh remaining, which will be set off from other incomes. Or just imagine 1 lakh was the income, expenses and losses 99,000. How much remaining? Only. In your entire life, you have never earned winnings. Now also in future, we don't know that whether you are going to earn this income or not. And just imagine, this is the first and the last time when we are getting this opportunity to charge tax on this income. And if we allow you expenses deduction, if we allow you the deduction for the losses happening in the course of these activities, will there be any income left for us to charge tax on? No. So what do you think? What is written here? We will allow you the deduction. No expense or no losses incurred in the course of such activity can be allowed as deduction out of this income. Meaning show this gross income taxable under the head IFRS without taking any deduction under the head IFRS. No expenses will be allowed, no loss will be allowed. That means the entire income will be shown as your IFRS income. Wait, can you have losses from other sources of income? Yes. Can you have losses from other sources of income? Yes. Income minus expense, more deduction, there is loss. So any loss from any source of income or any head of income, that loss can also not be adjusted against your winnings. So first of all, from your winnings, no expenses, no losses can be allowed. From this winnings income, expenses and losses incurred in the course of these activities will not be allowed as a deduction. Show this amount fully under the head IFRS. Out of that income, losses of other sources head and losses of other heads, no losses can be adjusted or set off against this winnings income. So set off of losses against winnings, possible or not possible? Not possible. That means your entire winnings will now be shown as a part of your gross total income. Because entire winnings will come in IFOS. From here, no expense, no losses will be allowed. From this loss, no losses, sorry, from this winnings income, no losses can be allowed as a set off, meaning your entire winnings income will appear in your IFOS, ultimately appear in your GTI. Your GTI will include entire winnings income. 1 lakh rupees winnings income, that entire 1 lakh rupees winnings income will be there in your GTI. Why? Because from that 1 lakh, you are not going to get any deduction for expense or losses, and neither any loss can be set off out of that. So your GTI will always include your full winnings income, which you have already shown under the head IFOS. Sure. Now from your GTI, do you take chapter 6 deduction? ATC to ATU, yes or no? Hello sir. Once you calculate your GTI from your gross total income, do you take chapter 6 deductions? Yes, ATC to ATU deductions you are taking only, no? You take it from GTI. But that part of GTI which is excluding winnings, from winnings you are not going to get chapter 6 deduction also. Because if these things are allowed to be reduced from your winnings, what winnings will be left to charge tax? Yes or no? So tell me. Chapter 6A deductions will be available from this income or will not be available? Will not be available from this income. Now can I say, see, have this visualization. 1 lakh rupees of winnings coming in your IFOS head. From that, will you get any expense or loss deduction? No. Entire 1 lakh will be shown as a part of your IFOS head. Now that IFOS head will become part of GTI. So in that GTI, IFOS is taken, and in IFOS, entire winnings is taken, meaning in your GTI, entire winnings will be shown. Because from there, other losses are also not allowed as a set off. Now in your GTI, whatever winnings was there, no, separate that, you have to show this full amount in your total income. From this, you are not going to get any chapter 6 deduction also. Meaning, in your total income, entire 1 lakh rupees of winnings will be shown. The winnings which you are actually having, no, will come in IFOS, and that same amount which you have written in IFOS, that exact same amount will be there in your total income. Separate that out of your total income. That is a special income. On that you are going to charge how much? 30%. Getting my point, everyone? Yes or no? Easy? Made easy. Say thank you. Now wait. I will write down two things in front of you. Income happening from owning and maintaining a racehorse, or income from betting or gambling, lottery, horse races, etc. Okay. Now you are going to tell me what income will happen. What income will happen from here? Come on. From here, you will earn stake money. And from this, you will earn winnings income. Yes or no? Pay attention now. From this income, deduction for expenses and losses incurred in such activities. Here it is allowed, here it is not allowed. Done, no? Then less set off of losses of other sources of income or other heads of income will be allowed from here, will not be allowed from here. Because in activity of owning and maintaining resource, I did not tell you that you will not get the deduction for expenses. You will not get the set off of losses from this income. Chapter 6 a deduction will not be allowed. I did not say all these things, meaning that even the expenses incurred on those activities will be allowed. Losses incurred in the course of those activities will be allowed. The set off of losses of other sources of income or other heads of income might be having some losses because the deductions are more as compared to their taxable incomes. So there are losses from other sources of income or other heads of income. Those losses can be adjusted against the income of this source, but not the income of casual income source. Hello, getting my point? Now, will you be able to claim? Yes. Will you be able to claim Chapter 6A deductions from section 80C to 80U? Yes. From here you can claim, here you cannot claim. Now, after claiming Chapter 6A deduction and all, okay, there will be balance income. Now, this balance income will be shown as a part of your total income. Yes or no? Now, tell me, this income was, stake money was 100 rupees. Out of that, 30, 20 and 30 deduction taken. 30, 20 and 30, 80 rupees deduction is taken. So how much will remain? 20 only? Hello? So will your total income show the entire income earned by you? Or less than that? Less than that, because out of that entire income, few deductions you will get, losses will be set off, yes or no? So that entire income will not directly come in your total income. Hello, sir? This will reduce. And on this income, tax at normal rates, because there was no special rate applied on this income. This is just like your other normal incomes, like salary income. Normal income only, no? Normal tax rates. House property income, normal income, no? Normal tax rates. PGBP income, normal income only, no? Normal tax rates. So just like other normal incomes which are taxable at normal rates, this is also your normal income but falling under IFOS. From that, deductions and everything you are getting, and after taking deductions, whatever normal income remains is this much only. On that, pay tax at normal rates, no? So along with your normal total income, this will be a part of your normal total income, not the special one. Getting my point? So here you have earned 100 rupees of winnings. Will you get any deduction? No. Will you get set off of loss? No. Will you get chapter 6 deduction? Can I say this entire amount of winnings which you have earned, this entire amount will be shown as a part of your total income. Now on that, apply tax at the rate of 30%, 115 BB. Got it, sir? Or 115 BBJ if it was online money gaming. Done, sir? Should I move ahead? Please don't forget this comparison, okay? Very, very, very important. So, now we are through with the discussion of all the incomes. All the incomes which can be taxed under the head PGBP. General charge says profit or gain arising from any business or profession will be charged. Other charging section, other clauses says this income, this income, this income, list of income is there. These incomes will also be charged under PGBP head. Sometimes we might feel that this income is chargeable under PGBP, but this is not actually chargeable under PGBP. This is chargeable under other heads. Sometimes we feel that okay, this income is chargeable under other heads. No, but in that case it will be chargeable under PGBP. Misconceptions. And few misconceptions we have cleared also right now. See, these were the misconceptions which we cleared. So if you see this income, you have to charge it under PGBP only. You cannot take it under other head. If you see this income, you have to charge it under other head only. You cannot bring under PGBP. Hello, sir. This is PGBP, not not other head. This is other head, not PGBP. Please be careful about these things, because these are few areas, gray areas, where your institute tests you a lot. In every alternate attempt, in the question, in the adjustments, they are going to put all these things in every alternate attempt. They do such kind of mischiefs. Okay, so now we are through with entire section 28. Okay, now I will tell you how to calculate the profits and gains, which is taxable under the head PGBP. Now we are going to discuss computation of profits and gains from business or profession. See, first of all, no, I'll tell you that what is written in the law, what the law says, what you are supposed to do. So computation of profits and gain, the computation section 29 is applicable. That section says that the profits and gains from business or profession shall be computed in accordance with the provisions of section 30 to 43D. Full stop. Section 29 over. Now understand whatever you want to understand. Law says that profit and gain you will compute in accordance with section 30 to 43D. Now if I ask a layman also that how to calculate profit and gain, even a layman can tell me. A science background student can also tell me that how to calculate profit and how to calculate profit and gain. Come on, tell me how to calculate. How? We'll have to take the incomes minus the expenses, profits. So there is no rocket science, in order to compute the profit and gain. You must be knowing. Even the law knows, even the lawmaker knows that a person who is reading this law, who will be reading this provision, he will be aware that how to determine the profit and gain. We are nobody to tell him that how to determine, because even he will be knowing that he has to take the incomes minus he has to do the expenses. Yes or no? But at least we should tell him one thing, that whatever profit or gain you are going to compute, compute those profits and gains in accordance with the provisions of section 30 to 43D. Now what is given in 30 to 43D? Deductions and disallowances. What is given? Deductions and disallowances. After section 28, you came to know that which all incomes are chargeable, yes or no? From those incomes only you are supposed to compute. Hello? The profit and gain. So from those incomes, you will compute the profit and gain by taking these deductions which we are allowing. And you are not going to claim those things which we are disallowing. Take these deductions, forget about these disallowances. These disallowances items will not be allowed to be reduced out of your incomes. The deductions items which we are going to tell you, you are supposed to reduce them only while calculating your PGBP income, while calculating your profits and gains. So first of all, I'll bring incomes under this head as per section 28. From those incomes only, I will have to derive the profits. How I will derive the profits? By reducing something out of that income. What all things I will reduce? 30 to 43D. I have to take care. That's it. Only those things will be reduced out of my income which are allowed as a deduction. Those things will not be reduced from my incomes which are disallowed. So the deductions and the disallowances given from section 30 to 43D are kept in mind. You have to keep them in mind while deriving your profits out of your income. Getting my point? Did you understand this basic discussion? Now tell me, we know that how to calculate profits and gains. Okay. So we'll give an effort. We'll try from our side that whether we are able to make one format for that or not. We are supposed to ultimately, here one figure will come. That figure has to be profit. So that will come if I take incomes and I will reduce some expenses. Only then the resulting figure will be what? Profits, no? Hello? Incomes will come from section 28. Or even the deemed PGBP income, section 41, even that will also come. Expenses will come from, go and check 30 to 37(1). Those are the deductions. So the part 30 to 37(1), all those things you reduce out of this incomes. The disallowances, those things which we are disallowing, you would be very much, excited to claim them as a deduction out of those incomes. Don't claim them as a deduction. We will not allow. They are disallowed items. Getting my point? So now, if I make a format, okay, no, income minus expense, we are going to get profits. Sure. So tell me, first thing I have to take is what? Incomes. So what are those incomes which are charged under this head? Come on, tell me. One by one. First is my main business income. Main incomes from my business. Now give me one example, one or two example of the main incomes of my business. If my business is to manufacture and sell footwear, or for example, my business is to manufacture and sell clothes. So my business is manufacturing business. In my manufacturing business, what is my main income? The clothes which I'll be manufacturing and selling, the sale price, the sale turnover will be my main income from my business. Yes or no? If I'm doing a profession, CA practice, so what will be the main income of my CA practice, the amount which I am charging from like my clients as my consultancy fees, as my audit fees, yes or no, as my fees for different services which I am providing to them. So that gross amount which I am receiving from my clients is my gross receipt. That is my main income from my business, from my profession. So I'll write down few examples also beside that so that you understand. Okay, no? So main incomes from the business can be the sales turnover and gross receipts. This is my main income from my business. Right? Is it necessary that I will always earn main incomes? Yes, I will always earn main income from my business. But that is not the only income which I'll be earning while doing a business or profession. While doing a business or profession, sometimes I earn additional incomes which are not the main incomes of my business or profession, but they are additionally received by me in the course of doing my business or profession, also known as incidental incomes. I am earning these incomes as an incidence of doing this business or profession. Example, my cloth business was there. Okay. So manufacturing shirts. So I'll bring cloth, cuttings will be done, stitching will be done. There will be some extra cloth remaining, which is of no use now. Small, pieces of clothes will be there. Those will be remaining, cuttings. So those small piece of cloth, cuttings which will remain, tell me, is it of any use to me in my cloth business? Am I able to stitch any cloth out of that? No. So that is a waste. That is a scrap in my business. Can I sell that scrap to someone else and earn income? My business is not to sell this scrap, but this scrap is happening in the course of my business or profession which I am selling and I am earning income. I would not have received this income if I would not have done this business. So this business, as a result of this business, the scrap is getting generated, which is getting sold, and I'm earning this income. So income from sale of scrap can be my what? PGBP income, but not main income, incidental income. Those incidental incomes are also to be taxed under PGBP. One example I will more give you. Okay. Now, for example, I'm a wholesaler. I'm selling the goods of a company in wholesale. So by purchasing the goods from the company on a wholesale basis and selling the goods on a wholesale, so whatever money I'll get by selling those goods, that is my main business income, income from my wholesale business, main business income. But sometimes if I exceed the target given by the company, sometimes I, buy more and sell more. So the company becomes happy and they gives me commission also. That commission which I am getting in the course of my wholesale business from the manufacturer whose goods I am selling, I am able to earn that commission only because I am doing this wholesale business. If I was not doing this wholesale business, this commission I would not have earned. Is it coming as a result of doing this business? The answer is yes. So can I say that this is also an income happening in the course of business, but not a main income? It is an incidental, it is an additional income. My intention was not to earn this income. My intention was to earn other income, main income. But while earning that income, additionally, this income is also happening. Getting my point, everyone? One more example, which I gave you in house property chapter, if you remember. I'm starting a very big factory in a remote area. So I want few employees and workers to come there and work for me. Without them, I will not be able to do my business. I will not be able to run my factory. So what I have done? I have bought a huge piece of land near my factory and I have constructed many houses. Entire township has been created. In that township, whatever houses I have, now I will give those houses to my employees to stay there. as their residence. But in return, I will charge a little bit of rent from them. Can I say that rent, my intention for giving those properties to my employees was not to earn rent. My intention was to run my business smoothly. But while running my business smoothly, I want employees over there. To keep my employees, I have constructed a township. In the township, I have constructed many houses. Out of those houses, few houses I have given to my employees, and from those employees, I am earning rent. I would not have been able to earn this rent from my employee if I would not have been doing this business. So this rental income is not earned with an intention to exploit the rent earning capacity. Rather, it is earned in the course of my business or profession. This is also incidental income, additional income happening as a result of doing this business. So always the main business income will be taxed? No. All the incidental incomes from business or profession, I write both, business or profession. Okay, from business or profession. So what are the incidental income? Sale of scrap, sale value of scrap, commission, rent from employees, etc. I have given you few examples, so that you can relate at what type of income it is. Okay, so these are few incomes. See, this is the direct income happening in my business, and this is indirect income happening as a result of my business activity. Sure. What other incomes I will charge? Come on, tell me. You only tell me. What other incomes I can sell? I can have. Fill in the blanks. Very good, Akshaya. Specific charge under section 28. Those incomes are to be charged under PGBP only, no? Any other income you can recollect? Deemed PGBP incomes under section 41. Sure. I hope I have covered all the incomes. Now no other income remains. So while doing business, whatever main activities are there, from that main activity, whatever income I am earning, that is my PGBP income. Incidental activities and incidental incomes, additional incomes are coming in the course of my business or profession. That is also PGBP income. Then section 28, specific charge, whatever income are there in specific charge, they are also my PGBP income. And also the incomes which are covered under section 41, deemed PGBP incomes, they are also my PGBP income. Yes or no? Now I will total all these incomes. These are my total incomes which are getting charged under the head PGBP. And I can very well say that these are the only incomes which will be covered under section 41, and no other income will come here. Because few incomes will go in salary, few incomes will go in house property, few will go to capital gain, few will go to IFOS. But these incomes will be definitely covered in PGBP. Now you are completely clear that which incomes will come in PGBP. Other than these, if any other income if you will take, you are gone. And if you don't take these incomes also under PGBP, then also you are gone. So you have to remember, not to miss any of them. Hello. And you have to remember not to cover any other incomes here except for these. Sure. I guarantee you, whenever this chapter we are going to start, the main questions, no, within 1 minute your answers will be on your calculator. That is my guarantee to you. Then what you have to do? You just have to present that answer. You have to worry about the presentation stuff. You will not find a single question difficult. Trust me on this. But let me come to that part. You will appreciate the things. The way in which you are going to do PGBP, no, nobody else is doing in the entire India. I'm telling you. You will have so much of the confidence in this chapter, no? Because see, this is the main chapter of your entire syllabus. And which is there in your 15-mark compulsory question. So you cannot take this chapter lightly, and you have to do this chapter in such a manner, no, that you are having complete control over this chapter. This chapter should not control you. You should control this chapter. Only then you will have, only then you will have confidence over other chapters. Other chapters are peanuts in front of this. If you have confidence in this chapter. And how to get that confidence, it is my duty. I'll do it. Don't worry. Let us come to that PGBP. But to go there, whatever I'll be doing, no, I'm preparing the base for that. Which incomes we are going to charge? These incomes to be taken. Which all deductions are to be taken? So now first part will be over. Now we are going to start with the second part, deductions. Then third part, disallowances. Once we are through with all those things, you have all those things in mind, and then we start the questions. We'll do the markings in the questions. You'll come to know that how the chapter has become easy for you. But straight away after doing this, we are not going to do PGBP questions. Straight away after doing deductions and without doing disallowances, we are not going to do PGBP questions. We have to complete at least till disallowances. Only then we will be in a position to solve the full question, which tells you to compute the profits and gains. Because see, profits and gains from business or profession with salary, other sources, capital gain and house property, all these heads taken together will give you GTI. So house property we have learned how to calculate income under the head house property. That is very easy. Salary we have learned how to calculate salary. That is also easy. That was not easy. It was made easy. Now PGBP we are learning that how to compute the income from this head. Then capital gain. Then IFOS. All the 5 heads when we learn, no, then I'll teach you clubbing. Then I'll teach you set off carry forward. Because in order to aggregate these 5 heads, we have to take care clubbing provisions also. We have to take care of set off and carry forward also. Once we are through with that, one total will come. And that total, my dear friends, will be your gross total income. And from that, you are supposed to take chapter 6 deduction. That also I am going to teach you. These deductions are available from GTI. And once you are through with that, a total income will come. And that is your 15 marks question. And on that, they can ask you to calculate the tax liability also. And tax liability calculation we already know. But the tax liability calculation will also undergo many changes. There will be many advanced concepts which will be brought in the calculation of tax liability. So you have to be very clear in your mind that this is the entire process. In this process where we are standing right now, what exactly we are doing. Okay. If you are clear about these things, no, only then you will be, only then you will love, only then you will understand that what exactly you are doing. Getting my point? Should I move ahead? Incomes covered. Now from this income only I have to take out the profits. How would I take? I will have to reduce something out of this. So what I will reduce? Come on, tell me. I will not write down expense. No. I will write down all the items which are allowed as deductions from 30 to 37 which may cover expenses, which may cover capital expenditures, which may cover some notional amounts, which might not be expense also. But these are items which are supposed to be reduced out of your income in order to get the profits and gains from this head. So can I say items covered under section 30 to 37(1). They are known as what? Deductions available out of your incomes. You will reduce all those things. Now, there are certain items which are covered in Disallowances like section 37 2B is there, section 38 is there, section 40 is there, section 40A is there, etc. So these items which are covered by disallowance, if you less them, you are gone. You're not supposed to reduce them while computing your profits because they are a disallowed item. So from your income, remember these items which are written in these sections, yes or no? These items are not to be reduced. They are disallowed, not to be allowed while computing your profits. Okay. Now, anything else? Section 29 is over, no? Section 29 says provisions of section 30 to 43D. So this is 30 to 43D. Yes or no? One final figure will come. That will be your profit. No, wait. There is something more which nobody knows, but we have to reduce. No section tells you to reduce that. No section is required actually to tell you to reduce that, because it does not require provision to tell you that reduce this. It requires common sense, not cost. Costs and everything will be covered. Tell me. If you will tell me, I'll be very happy, very happy. All the costs and everything will be covered in 30 to 37 one. No, 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 no. No, Rajlakshmi. No, no, no. So the moment I'm saying less, no, unrecorded items will also be covered. And unrecorded things are not covered here. Other method we are doing, no, to calculate PGBP. There unrecorded things will come. Hint. Sometimes while doing the business, no, there are some mishaps which might result into some losses. Yes. For example, I purchased raw materials. Raw material for my cloth business. So the cloth will be my raw material. For example, I'm manufacturing these type of shirts. So I would require cloth as a raw material, no? So I brought cloth. I bought cloth from Surat, Gujarat. Surat is a very big market for cloth, and entire raw material for my manufacturing factory in Tamil Nadu comes from Surat. So I ordered to my supplier, and supplier has sent the raw material, meaning the cloth, by way of a truck. So truck is carrying the raw material coming to Tamil Nadu. Half an hour it will reach, no? Surat to Tamil Nadu. Or it will take some days. 2 days, 3 days, 4 days, yes or no? So in transit, what if the truck meets with an accident? Entire raw material will be lost. Possibly the truck was moving and automatically all of a sudden there was some spark and it caught fire. So whatever raw material which was there in the truck, the cost of that raw material was 10 lakh rupees. 10 lakh worth of raw material was there in that truck. Entire raw material gone. Is it a profit or it is a loss which is getting incurred in the course of my business? There is, see, there, when there is a business, no, there is some risk. And sometimes that risk gets materialized and results into some losses like this. Loss in transit. What if in my factory I was storing some finished goods in my warehouse? Some burglars and thieves, they came in the night and they ran away with few of my valuable stock. Theft can happen, and as a result of theft, what happened? I lost 2 lakh worth of my stock. I am running a small mobile shop. In my mobile shop, I am keeping the stock of mobile phones. Some mobile phone costing 10,000, some mobile phones costing 20,000, some are iPhones, 1 lakh rupees. Night law, what happened? Some thieves came. They broke the, what do you call that? Lock. And uh, they ran away with my mobile phones stock. 2 lakh rupees worth of mobile phones they took away. Is it a profit happening in my business, or it is a loss happening due to this event? These type of risks are involved in the business, any business you see. So there can be some losses which are incurred in the course of doing your business. Some employee who was handling some cash of the company, he ran away with the cash. 10 lakh rupees of cash was kept with him. Because see, in my business now, my business is what? My business, many customers are coming everyday basis. Some customers are, scanning and making the payment. Some customers are giving in cash. And one manager was there in my store, and that manager was handling every cash and every transaction. His duty was to count the cash every day when the business was closed, count the cash, tally the accounts, take that cash at home, and next day morning while coming to the office, coming to the store, he used to deposit that cash in the bank. One fine day, he went with the money, but he did not return. He vanished in between with 10 lakh rupees of cash. One employee who is sitting at my cash counter, whatever the customers are paying, no, if the customer is paying 100 rupees, out of that 100, he keeps 2 rupees in his pocket and keeps only 98 rupees in the cash box. From every transaction, he takes 1 or 2 rupees, 1 or 2 rupees, 3 rupees, 4 rupees, just like this, he did for the full year. And 2 to 3 lakh rupees, which should have been in my cash box, he embezzled that amount. Isn't it a loss happening in the course of my business? So if the charge is on profit and gains, hello, if the charge is on profit and gains of the business, how can you bloody even think about the profit and gain without adjusting these kind of losses? You have to adjust them, only then you are going to get the proper and correct figure of your profit and gain, no? For this, there is no requirement of any section telling you to take the deduction of these losses. Common sense is required. A business understanding is required. If I say that 10 lakh rupees I earned as a profit, but during the year 2 lakh worth of raw material lost by fire. So how much is the profit happening in my business? 10 lakh or only 8 lakhs? 8 lakhs. So to get that 8 lakh, what I have to do? I have to adjust that 2 lakh loss from my profits only, no? No section under the PGBP will tell you to adjust these losses. You have to adjust them on your own. Having that common sense that profits or gains of the business cannot be derived without adjusting these losses. Come on, my dear friends, understanding or not? So tell me what I'll do here. I will reduce one very, very, very important thing, but very much neglected item, which nobody, takes care. That is what? Losses incurred in the course of my business or profession. Loss by fire can be there. Loss by theft can be there. Okay. Then loss by embezzlement can be there, etc., etc. There are many type of risks which are involved in the business, and if those risks materialize, I incur these kind of losses. So even these losses needs to be adjusted in order to determine my profit, because without adjusting them, profits cannot be derived. Now this is my profits and gains. And friends, This is my PGBP income, means this is the income of my business or profession which is chargeable under the head PGBP. This is the profits. Wait. The method which you are doing here, no? You are calculating the profits directly, only taking those incomes which are taxable under PGBP. The incomes which will be taxable under the PGBP, we will always put a tick mark on those incomes. While reading the question, no, whenever we'll be reading the question, those incomes which are taxable under the PGBP head, against those incomes, we will say, tick, this is my PGBP income. And cross, meaning this is not my PGBP income. The incomes against which I have put a cross, I am not going to add those incomes over here, because those incomes are either any other head or they are exempt incomes. Why would I bring those incomes here? I would bring only those incomes which are my business income. So ticks and crosses will become very important for this chapter for you. Now there are certain items which are to be taken as a deduction. There are certain losses which might be happening in the course of my business. Against those expenses and items or losses, I will put a tick, meaning that these expenses, these losses are allowed to be reduced. They are allowed to be reduced out of my profits, out of my incomes. And against any expenditure, against any item, against any loss, if I have put a cross, meaning that these expenses, these losses, these items are not eligible to be deducted out of my business income to find out the profit. Why? Because they are covered under other heads. They are the expenses to be covered under other heads, or they are specifically disallowed. Hello. They are not the losses incurred in the course of my business or profession. Against all those expenses, items or losses, I will put a cross. So here I have to take only tick marked incomes, only the tick marked expenses and losses. Only then I will derive this profit. This is the direct method, because we are considering only the business incomes and business related deductions. That's it. We are ignoring those things which don't belong to PGBP only. How will you come to know that which expenses are tick, which items are tick, which losses are tick? For that, second part of the chapter is there. You have just now identified this first part. Now to identify the second part, that which items are tick, which items are cross, not allowed, don't reduce, acha, allowed, reduce. To know that, we will be going to the second part of the chapter. Getting my point, everyone? Sure? Now, wait. The method is, this method which we are doing, this is known as direct method. Which method? Direct method. And see, one more method is there. That is known as indirect method. And majority of the questions in the examinations are made on that indirect method. Sir, why are you telling us to calculate the profits like this? We have prepared our books of accounts. No, sir. Manufacturing account, trading account, P&L account. If that is there with us, in that manufacturing, trading and P&L account, net profit we have already calculated. No, sir. So instead of calculating the profit separately like this, why don't we go directly in the books of accounts, the net profit for the year which we have calculated, take that net profit and tell that this is the net profit of my business. Can you do it? Why not? Because this net profit which you are bringing from your books of accounts, from your P&L account, that net profits, to get this net profit, all the incomes of the year are added. PGBP, other heads income, even the exempt incomes, because your accounting does not differentiate between whether this income is taxable under PGBP or not, whether this is an exempt income or not. In your accounting, you account all the incomes, no? So in your P&L credit side, you would have taken all the incomes of the year. And those incomes include your PGBP income also and your other heads income also, and those incomes which are exempt under the Income Tax Act. All the incomes you have taken. And after taking all the incomes, this profit has been derived. Not just the incomes, but on the debit side, expenses are written. In your accounting, no, you account for all the expenses of the year. Even sometimes some things which are not real expenses, some imagination, reserve for bad and doubtful debts, provision for this expense, provision for that expense. These are your imaginary figures which you put in the P&L debit side. There are certain real expenses also, but all the real expenses are not available as a deduction under PGBP. Some expenses will be covered under other heads. Some expenses will be expressly disallowed as per PGBP provisions. Getting my point? So after reducing all the items debited in P&L, you have arrived at the figure of net profit. So this net profit, you cannot say that this is the profit of your business or your profession. This net profit includes all other incomes also. This net profit is derived after taking the deduction, after reducing every expense, which is a real expense, non-real expense, notional expense. Many things are reduced to get this net profit. But that is damn sure that my business profit is hidden inside this net profit only. I just have to fetch that business profit out of this net profit. How would I bring that out? Simple. I will take the net profit as per P&L account. Yes or no? This net profit I will take. See, sometimes it will be income and expenditure account also will be given to you. Yes or no? So then write down surplus as per income and expenditure account. Only the terminology will change. Effects and everything will remain same. Instead of net profit, they might give you what? Income and expenditure. So instead of debit side and credit side, they will be talking about income side and expense side. Instead of net profit, net loss, they will be talking about surplus and deficit. Surplus means what? Net profit only, no? Understanding? So now, if I say net profit you have taken from your P&L, and from this net profit only, we are supposed to fetch our PGBP income. Now tell me one thing. This net profit, to calculate this net profit, in the P&L debit side, all the things are reduced to get this net profit. Out of those things which are debited in P&L, there are certain items which are allowed under PGBP head. They are reduced, then it is okay. But there are certain items debited to P&L which are not allowed as a deduction under PGBP head. Either they are specifically disallowed or they are not the expenses of PGBP head. They are the expenses of other heads. Or they are not real expenses only. They are provisions, they are reserves and all. Should those things to be deducted while calculating PGBP? No. But for calculating this profit, even those are reduced, no, to get this profit. Should they be reduced or they should not be reduced? They should not be reduced. But what you have done? You have actually reduced to get this profit. So what you will do? Now you rectify the amount which are reduced, which are not to be reduced, you add them back in the profit. So what you will do now? You will add all the items which are debited to P&L account but not allowable under the head PGBP. Yes or no? Add all those items. Meaning that on your P&L debit side, no, one by one you are going to check every item. Okay, this item allowed under PGBP. This item allowed under, oh, third item not allowed under PGBP. You will put a cross against that. And whatever item against which you have put a cross, that item you are supposed to pick and add in your profit. That's it. Got it, sir? Now debit side will be over. Now come to credit side. Credit side, many incomes will be there. All the incomes of the credit side are added to get this profit. The incomes which are exempt, those incomes are also added. The incomes which do not belong to PGBP head, belongs to other heads, even those incomes are added to get this profit. Should they be added? No. But they are added. So I will have to give an effect. I will have to give a corrective effect. What effect should I give? The incomes which are added to get this profit, which should not be added because they are not PGBP incomes, yes or no? I will have to reduce all those incomes which are credited in P&L and added to get this profit. I will have to reduce all those incomes out of my profit. So I will do less items credited to P&L but not taxable under the head PGBP. Either they will be taxable under other heads or they will be exempt incomes only, but not taxable under PGBP. That is for sure. So all those items of incomes I will reduce. Yes or no? Entire P&L will be done. Now, after the P&L will be done, no, they will be giving you some extra information. That okay, during the year, this was your expense which you had incurred for the purpose of business. For that, you are supposed to get the deduction also under PGBP head. But that expense was not debited to P&L. Just imagine, if it was debited, it should have been reduced out of your profit. Should it be reduced? Yes, it should have been reduced. But it was not debited, so it was not reduced to calculate this profit. So what will you do now? You will have to now reduce it because that is allowed. Not recorded, so not reduced. But should it be allowed? Yes. So take a deduction for those expenses. Those expenses are your business related expense only. But since it was not debited to P&L, it could not be reduced to calculate this profit. So now you reduce, no, while calculating your profit and gain. Understanding? So what you will do? You will reduce the items which are not debited to P&L account. But they are allowable under the head PGBP. We also call them unrecorded business expenses, UBE. What will we call them? UBE, unrecorded business expense. These are those expenses which are for my business, for which I am going to get the deduction. But since they were not debited to P&L, they were not reduced to calculate this profit. Now I will reduce to calculate my PGBP income. Yes or no? Plus or minus? Minus. See, you have to be very careful. Whatever items you will reduce, no, you will put all those items in brackets. And if you keep any item which is to be reduced, if you keep that item without brackets, no, there are bright chances that you end up committing mistakes. Bright chances. The moment you will see a bracket, no, you will stop your hand going on the biggest button on your calculator. Otherwise, you have this habit, no, tap, plus, tap, plus, tap, plus. No plus because it is in bracket. We have to reduce. You will save yourself by committing silly error. So always those items which are to be reduced, put all those items in the bracket. That's it. But the items which are to be added, don't put them in the bracket. No. Keep them without the bracket. Okay. Hello, sir. Now, what I will add here. Now, this you will tell me to fill in the blanks. That was UBE, unrecorded business expense. Now, what can come? Unrecorded business incomes. So, in the adjustment, they will tell you that there was this income which you have earned during the year. Hello, this is your taxable business income. You will come to know, okay, ayo, this is my business income. But this business income was not credited in the P&L account. That means this has to be a part of your profit. But is it a part of your profit? Have you added this in the profit? No. Now add as your unrecorded business income. So add the items of income which is not credited to what? P&L account, but they are taxable under the head PGBP, also known as unrecorded business income. Okay, pay attention. Add. Now a final figure will come that out of your net profit, no, now you have derived a profit, and this profit appearing in front of you, this amount. This amount is your PGBP income. This is your profit from your business. Meaning that you have cleaned your net profit as per P&L. You have cleaned it, and out of that you have taken out your business profit. Getting my point? Sure. See, first two items you will get from P&L account only. P&L debited, P&L credited. But tick or cross. Cross. In the P&L debit side, whatever cross items are there, add them. In the P&L credit side, whatever cross items are there, less them. Then in the adjustment, you will do the marking, UBE and UBI. Marking will be done that this is unrecorded business expense, unrecorded business income, not debited, not credited, but shown separately. So whenever it is shown separately, you have to identify, okay, this was my business income, not recorded. Besides that, we'll write UBI. Oh, this was my business expense. It was to be allowed as a deduction. Oh, not recorded, unrecorded business expense. So I will write UBE. So whatever items against which I have written UBE, I will come and separately reduce them. Whatever items against which I would have written UBI, I will add all those things in my profits. Getting my point? That's it. This is the way in which from your net profit, you will find out profit of your business. Is it a direct way of calculating your business profit? Or you are taking out your business profit out of your accounting profit? So this is an indirect method to compute your business profits. Yes or no? So also known as indirect method. This is indirect method. When will you follow indirect method? Come on, tell me. When the P&L is given in the question, income and expenditure account is given, the details of P&L, details of income and expenditure, net profit, surplus, etc. is given in the question. That time only you are able to follow this. If these figures are given in the question, no, that means the examiner wants you to calculate the PGBP income by indirect method. You cannot apply direct method. Getting my point? But if in the question, receipt and payment account is there, bank passbook detail, cash book details are given, these things never show profit and loss. There will be no profit figure given. So the question is wrong. No. Now the examiner wants you to apply your mind. If you cannot indirectly take out the profits out of your business profits out of your accounting profits, because accounting profits are not given, you can directly also calculate by taking only business income and business expenses. Direct method you have to follow in that case. Now, whenever I will be solving any question, no, that time I am going to ask you that which method we have to apply, and you are supposed to tell me. That method only we are going to apply. And Don't ever try to, give me wrong answers over here. I will come there and I will give you a slap. Why? Because this cannot be easier than this. Trust me. Now, I'll ask you one question. I want to know that how you are actually thinking. See, is it possible that always the P&L account will show net profit? Sometimes it might show net losses also. Income and expenditure account will not always show surplus. It might show deficit also. So what if instead of net profit, the net loss is given? Deficit as per income and expenditure account is given. So here I will have to write what? Net loss as per P&L. Or I will write deficit as per income and expenditure account. This amount I will write here. Then don't you think that these effects will also change? Plus will become minus, minus will become plus. If you do it, I will come in the exam hall. I will be standing beside you. If you do it, no, I will snatch your paper, tear it. Don't change the effects, Amma. Please. Effects are going to remain same. Something which is not to be reduced. Why you have reduced? You have to add it back. Hello. Something which you have added, not to be added, reduce. Effect will remain same. Plus will remain same. Minus will remain same. Hello. But only this amount which you are going to write, no, now you are going to write this amount in bracket. That's it. Just thank God that I don't set the papers, huh? Just thank God. These type of small silly errors, I'll make you all commit. And you will go mad in the exams. What is happening in your life, you will not understand only. An examiner has all the power to do such madness, huh? You cannot blame the examiner to set the paper difficult. You have to blame yourself that you did not prepare for the worst come scenario. The worst come scenario can be this: instead of profit, they have given loss. What will you do? Don't change any effect. That's it. Instead of net profit, write down net loss, and the amount of net loss write in the bracket. This cannot be easier than this. You don't have to apply your mind. Get it? Sure? Should I move ahead? Now see, whatever method you are following, direct method or indirect method, okay? By following this method, you are always supposed to calculate the PGBP income. Either the direct method you will follow or you will follow indirect method. But for every business, every profession which you are doing, you are supposed to calculate the profits and gains separately. What did I say? Separate profit and gain. You cannot calculate the profits and gains from all your businesses together. If you are having three businesses, for example, business A, business B, and business C. Three businesses you are having, okay? So the income of this business, 100, 100, 100. Example. Okay. Minus expenses of the business which are allowable as PGBP deduction. Okay. This is 80, this is 60, and this is 50. Possible? Now, what is the profit, sir? 20, 40, 50. You have to separately calculate. This 20 plus 40 plus 50 will give you 110. This is your PGBP head final income. Wait, 100 plus 100 plus 100 will give you 300. 80 plus 60 plus 50 will give you 190. So 300 minus 190 will also give you 110, no? So instead of calculating everything separately, finally you are going to add all the profits. No, sir. Ultimately, you are getting 110. So rather than calculating separately, let us take all the incomes of all the businesses together. Let us take all the expenses of all the businesses together and calculate the business income profits from all the businesses together. Even that amount is going to come same only. No, sir. Then what is the reason for calculating the profits of each business separately? There has to be some reason. You have to calculate the profit separately. You cannot do this. You cannot do this. This approach is wrong. From all the businesses, all incomes minus all expenses, the total profit of all the businesses, you are not supposed to calculate it. Under the head PGBP, if you have 100 businesses, no, for all the 100 businesses, separate calculation of profit and gain should happen. Separately, the profit and gain will be calculated. Every business, either you apply direct method or indirect method, we don't, we don't care about that. You have to calculate the profit and gain separately. And how you will be able to do it? Like this only. But why are you doing it separately, sir? Ultimately, the final income will be same. And on this income, you are supposed to pay tax. So that income you are getting by doing the total also, no? Total calculation together also. Then why are you doing it separately? See, I'll tell you the reason now. Because whenever you do a business, no, the businesses are of three types. Either the business is speculation business, or the business is specified under section 35 AD, also known as specified business. And the business which is not a speculation business, not a specified business, any other business, that is known as normal business. So now whenever you will be having any business, no, you have to ask yourself that, okay, this business is my normal business, or is it my speculation business, or is it my specified business? You'll have to ask yourself. You'll have to first check that which type of business is this. Why will you check? I'll tell you. But first of all, tell me, speculation business. Have you heard about this speculation? What is the meaning of speculation business? Intention is to earn the profit, but you are speculating. You are speculating with an intention to earn profit. Meaning that there is some goods, there are some products, there are some shares or securities, not just shares. Not just shares. It can be any product, any goods, even the shares and securities also, whose prices keeps on fluctuating very fast. Prices going up, prices coming down. Prices going up, prices coming down. There is a very frequent price fluctuation in the prices of these goods or shares, etc. You are not interested in buying the goods or shares and taking the delivery. No, 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 no. You are not interested in having the stock of these items. You are interested in buying at a lower price, selling at a higher price, earn profit and go away. Your intention is not to create a stock of these items. Meaning that whenever you will buy, no, delivery will not come. Whenever you will sell, no, that sale transaction will be to square off the buy transaction. Because if you will not do that, the delivery will come. You will have to maintain the stock. So without the actual delivery, what did I say? Without the actual delivery of goods or shares or securities, if you are buying and selling them, meaning one transaction of buy is done, to square off that transaction, you have done a sale transaction. So no delivery coming and no delivery going, but still you are earning a profit. This is a speculation. In the morning you sold, but to square off this transaction, you have to do a reverse transaction. You have to buy by the evening. This is known as short sale. It happens in the stock market. See, 100 rupees was the value of the shares or the goods which I'm buying in the morning time. Why would I buy first? Because I feel that the goods or the shares which I am buying right now for 100, by the evening, no, by the time the market will close, hello, the price of the share or the goods will rise and it will be more than 100. So I will buy first at a lower price and then sell at a higher price to make the profit. Yes or no? My intention is to earn the profit. Profit which is hidden in that price fluctuation. That's it. Price fluctuation of the goods or the shares. I'm not interested in those goods or shares. I'm not interested in taking the delivery. Meaning that I am doing speculation, which can happen in many goods. Crude oil. Prices do fluctuate throughout the day. Foreign currency. Prices do fluctuate throughout the day. Shares, securities, prices do fluctuate throughout the day. Agricultural commodities, prices do fluctuate throughout the day. So what I'm doing? I want to take out the profit which is hidden in that price fluctuation. So if I buy, meaning that now I will have to take the delivery. If by the evening, by the time the market closes, if before that I don't square off this transaction by a sale transaction, which is a reverse transaction of this, I will have to take the delivery, and I am not interested in taking the delivery of the goods or shares. If by evening I don't sell the shares, no, shares will come in my demat account. Delivery came. I don't want to have them in my demat. Getting my point? I don't want to create the stock out of this. So buy transaction, opposite transaction before the end of the market will happen to square off. So that no delivery coming, no delivery going, but profit or loss made. This is what? Speculation. But what if I'm a normal share trader buying the shares from the market, keeping them in my demat account, stock created, and whenever the correct prices will come, no, I'll get the correct prices that time from my stock. I will sell the shares. This is not speculation. This is normal share trading business. Normal business. What if I'm buying these pens? I'm buying, keeping the stock. When I get a buyer no, who is going to give me more than the cost, I will sell at a profit. Buying, I took the delivery. I'm holding in stock. And selling from my stock, the item will go. This is what normal business. But in the morning I bought, it is there only. Delivery is yet to come. Hello, I have not taken the delivery. But by the evening, if I don't sell it to someone, no, the delivery will automatically come. So I don't want to take that delivery. I found out some seller who is ready to give me more price. Okay, I sold him. So the delivery which was about to come got cancelled. Buying also happened, selling also happened, profit gain, but no delivery. This is what speculation. Will you remember? Please write down in your textbook somewhere, in your notebook somewhere. If any activity involves, if any activity involves buying and selling of any goods, products, securities, etc. Securities will automatically include shares, huh? Okay. Goods, products, securities, etc. Without their actual delivery, without the actual delivery, without the actual delivery of such goods, products, or securities, etc., then then such activity will be treated as speculative activity or speculative business. That activity will be treated as speculative activity or speculative business. Understanding? And this activity is done with an intention to earn profit. No. So this activity has to be your business. But which type of business? Speculation business. Got it, everyone? Sure? Now, there are certain businesses. See, there are many businesses. Out of those many businesses, there are 15 businesses. How many businesses? 15 businesses which are specified under section 35AD. So in section 35AD, a list of businesses is given. Some businesses whose names are specified in section 35AD. Why it is specified, what will happen, I'll tell you, don't worry about that. Okay. For these businesses, the government, the lawmakers have given some benefits. What benefits? That normal businesses, the cost of asset is not allowed fully, it is allowed in the form of depreciation. But in the case of specified businesses, that entire cost of the asset allowed fully. No need to claim it as depreciation, entire amount of asset allowed fully. This is the benefit which happens for specified businesses. Yes or no? So keep your specified businesses, those 15 businesses whose names are specified in section 35D, keep those businesses separately. And any other business, they are known as normal business. Now tell me, out of these three businesses, some business can be speculation business or some businesses can be specified business, yes or no? And some business can be normal business also. Now, whenever you are having a speculation business or a specified business or a normal business and profit you are getting from all those business, the profits are taxable at same rates, no problem. So whether it is speculation business or a specified business or a normal business, the profits are there. No, add the profits, because on the entire profit you are supposed to pay tax at same rates, normal rates. There are no different tax rates. But it is not necessary that all the business will give you profit. Some businesses might give you loss, and there are bright chances that in speculation you incur loss. In specified business also you will incur loss, because in specified business the cost of asset is allowed fully, which is a big amount. Getting my point? So there are bright chances that in these two businesses, instead of profits, you are having what? Losses. And you won't believe that the set of provisions and the carry forward provisions of these losses of all the three types of businesses are separate. Loss of a speculation business can be set off only against the profit of any other speculation business, that we are going to study in set off and carry forward chapter. But right now, the concept is I want to convey. To understand that concept, please listen to me very carefully. If you have any speculation business having a loss, the loss of that speculation business can be set off against the profit of any other speculation business only. It cannot be set off against the profit of specified business. It cannot be set off against the profit of normal business. The same thing is for specified business. A loss of a specified business can be set off only against the profit of any other specified business only. It cannot be set off against the profit of speculation business. It cannot be set off against the profits of normal business. Hello, sir. Now tell me one thing. If you have calculated the profits of all the businesses together, there was bright chance that speculation business would have a loss. And unknowingly, that loss you adjusted against the profits of those businesses against which it was not supposed to be set off. Yes or no? What if you are not having a speculation business profit in this year? What will you do? Speculation business losses can be adjusted only out of the profit of speculation business. If no speculation business, no profit, no. It cannot be adjusted against profit of other businesses or other heads also. Directly carry forward. In the next year, whenever you will have a speculation profit from the same business or other business, other speculation business, from that profit you set off. Somebody will say, sir, in the next year also there is no speculation profit. Then don't worry, carry forward to next year. In that year, from the same speculation business or any speculation business, you will get a profit. From there, you adjust it. So then also I don't have 4 years maximum carry forward allowed. How many years? 4 years maximum carry forward allowed. Within 4 years, if you cannot adjust now, forget about the losses. In the 5th year, it will not be allowed. The losses will lapse. But when you will come to specified business, no, specified business loss will be allowed only from the profit of other specified business. What if I don't have other specified business profits, sir? It cannot be adjusted against any other business profits and not even against income of any other heads. Will be carried forward. Subsequent year, from the same specified business or any specified business, you will get profit. No, from there you adjust. What if in the subsequent year also I don't have any, don't worry, carry forward to the next year. In that year, same specified business or any specified business can give you what profit. From there you adjust. Sir, what if I, wait, you can carry forward the losses of specified business for indefinite period. There is no restriction of 4 years, indefinite period. Till the time these losses are not adjusted, no, you can carry forward. These losses will not lapse. Specified business loss. Why different treatment? 4 years, indefinite period. All the logics you will get. Don't worry about that. Okay. But right now understand what I want to convey. Normal business is there, no? Normal business. The business which is not a speculation business, not a specified business. See, if I am in the business of stationery shop, my stationery shop, I am buying and selling stationery. Is it a speculation? No. And this business is not specified also under section 35D. So this is my normal business. If this business is having a loss, normal business is having a loss, no, there is no restriction. The loss of normal business can be adjusted against profits of any business. It can be adjusted against the profit of other normal business. It can be adjusted against the profit of speculation business also. It can be adjusted against the profit of specified business also. It can be adjusted against the profit of any business. Sir, what if I don't have any other business income? Don't worry. It can also be set off against income of other heads like house property, capital gain, others, except salary. Except salary. Any other head also, your normal business losses can be adjusted against that. Sir, what if I don't have any other heads also? Don't worry, you can carry forward. After carry forward, you'll have the income, profit of same business or any other business. From that business profit you adjust. Sir, what if in the subsequent year I don't have any business profit, not from this business, not from any other business? So in the subsequent year, it cannot be set off against other heads income, only business income. If there is no business income, no, don't worry, you can carry forward to the next year. Next year, you will get the profit of same business or any other business. Against that you set off. So what? 8 years carry forward. Got it? Now in set off and carry forward, you'll go, no, I'll tell you all these things. You will tell me, oh, yo, sir, you have already taught us all these things. Everything is connected to each other. Now pay attention. If this business was a, first business was a speculation business, okay, no? So instead of 20 profit, it is a 20 loss. Now if you are doing separately, no, you come to know that, okay, this 20 lakhs, 20 rupees is my speculation business loss. I have to set it off only against speculation business. If not, then it cannot be set off against other business income. It cannot be set off against other heads income. Hello? And if there is no incomes, no speculation business income, this loss will be carried forward to subsequent year. This 20 lakhs will be carried forward to subsequent year. Eligible for 4 years carry forward, this 20. Can you identify now? And just imagine, if you calculate the profit, now your profit will be This 20 lakh loss, 40 and 50. Now what will be your profit here? Come on, tell me. Taxable profit will be 90. And this loss will be carried forward if you do it separately. This 20 cannot be set off this year. Carry forward. And this year your taxable PGBP income is 90. Pay tax on 90. This loss cannot be adjusted from specified business income or normal business income. These two businesses are not speculation business. Getting my point? What if you are doing it together? 300 minus, this is 180 and this is 50. 180 and 50 will be 230. 230. Here it would have been 70 profit. Is it matching? Meaning that 20 rupees loss got adjusted and then 70 taxable is coming. But don't you think it is adjusted against that profit against which it is not allowed only? That will happen if you calculate together. Hence they are saying how many businesses you can have during the year. Come on, tell me how many businesses you can have. You can have n number of businesses. But all those businesses you have to classify into three categories. Few businesses will be speculation business, few businesses will be specified business, few businesses will be, now bring all the businesses under PGBP. But speculation business, specified business, normal business, each and every business, calculate the profit separately. That's it. Income of that business minus allowable deductions, you will get profit. Income of that business, allowable deductions, you will get profit. That's it. Only then you will come to know which type of business is giving you loss, how that loss will be set off, how that loss will be carried forward, for how much time that loss will be carried forward. Understanding? So in order to do all those things, it is very important to calculate the profits separately. And bloody, we were doing the same thing for house property also. No, come on. If I have 5 properties, for every property the income would have been calculated separately. No, then we were going and adding all the incomes of the property to get house property head income. There it was no restriction that SOP loss cannot be adjusted from LOP, SOP loss cannot be adjusted from DLOP. It was allowed. But still, for every type of property, the separate calculation was prescribed there. In salary, we were not doing that. Income from all the employers under the same head. And total 50,000 standard deduction or 75,000 standard deduction, and total 16 clause 2 or 16 clause 3. All the incomes from all the employers during the year under the same statement. For every employer, salary need not be calculated separately. From all your employers during the previous year, one salary statement, everything in one salary statement, that's it. But here, every single business which you are bringing to PGBP head, calculate the profits separately. Got it? Everyone, should I move? Perfect. Now, pay attention. Very important thing I am going to discuss now. Very, very, very important. There is one section 145. Okay. Now, what this section says, before that, how many heads of income you have? 5 heads, no? If I say how many sources, you will say 5? You will say multiple sources. But all those sources classified under 5 heads. Yes or no? So, first head is salary. Second is house property. Third is PGBP. Fourth is capital gain. Last one is IFOS. I have deliberately written PGBP below and not besides house property, because that is the third head. It should come between house property and capital gain above. This should have been written here. But no, I am not writing here. I am writing it separately. This IFOS I would have written here. But no, I am writing it separately. Why? Because Whenever you calculate your salary head, no, under the Income Tax Act, whenever you will go and calculate your salary head income, that income will be calculated on due or receipt, whichever is earlier basis. So under your salary head, whatever salary which becomes due in this year, whatever salary which is received in this year will be taxable under your salary head. Yes or no? We are not bothered that how you are accounting that salary in your books of accounts. Your method of accounting, how you are recording that salary in your books of accounts, irrelevant to us. We don't give a damn about that. Your salary head income will be calculated on due or receipt, whichever is earlier basis. Whether you have recorded that salary in your books of accounts or you have not recorded will not make any difference to us. Hello, sir. You are going to get standard deduction 50,000 or 75,000, professional tax deduction on what? Payment basis only, and one deduction entertainment allowance. If you have received entertainment allowance during the year, maximum to the extent of 5,000, you are going to get that. Even for expenses also, we don't pay any attention that how these things are recorded in your, these are not recorded. Standard deduction is never recorded in your books of accounts. That is something which you get as a deduction under salary head. Hello. So salary head, whenever you will calculate, no, don't pay any attention to the method of accounting. Don't pay any attention that how this salary was recorded in your books, because method of accounting and recording the salary in the books are irrelevant to calculate your income under the salary head. What is relevant? Due or receipt, whichever is earlier basis. That's it. Got it? Whenever you calculate your house property head, no, rent is not taxed. Annual value is taxed. Now to calculate that annual value, you want rent also. Yes or no? So under the head house property, annual value is taxable. To calculate that annual value, rent is also considered. What rent is considered? Come on, tell me. The rent which is for this period for which the property is let out. Whether you have received or receivable, that rent will only be used to calculate your annual value. We are least bothered that how you are recording that rent in your books of accounts. Whether you are recording it or not recording, we are not bothered about that. Expenses incurred to earn the rent on your property, how you are recording those expenses in your books, we are not bothered about that also. You will get the deduction for municipal taxes which you have actually paid in this year. Hello, you will get the deduction for whatever interest which belongs to this year on due basis in this year. That's it. Because the income is taxed on due basis under the annual value, so the deduction for interest should also be available on due basis. Understanding? Rest all the expenses ignore, no? Do recollect all these things which we have already done. Anywhere I told you that you have to take care that how this rent was recorded in your books, how these expenses were recorded in your books, how the municipal taxes were recorded in your books. No need to see the books of accounts also. Whether you have recorded these items of house property head in your books or not will not be material also. It is irrelevant thing. House property income will be calculated in the way in which we have told you to calculate it. Yes or no? Now, if you'll come to capital gain, no. Capital gain arises when a capital asset is transferred. This year, capital asset transferred. Capital gain will arise, pay tax. That's it. Now, whether you have received the consideration, recorded it or not, how that is recorded in the books, we are least bothered about that also. This year, if the capital asset is transferred, capital gain will arise and you'll have to pay tax on that. Hello? Now to calculate that capital gain, you need cost also of the capital asset. You need the selling price also of the capital asset. How you have recorded these things in your books, we don't want to see also. What was the method of accounting for these two items? We don't want to know also. Take the selling price of the asset, consideration for transfer of the asset, minus the cost of the asset. Gain will be there. That gain will be taxable in the year in which the asset is transferred. That's it. There is no need of books, and there is no need of books, then definitely there is no need to see in that books how these incomes and expenses were recorded. But whenever you calculate PGBP and IFRS head, no, whenever you calculate these two heads, see, there are many incomes which will be taxable under PGBP head. There will be many incomes which will be taxable under the IFRS head. There will be many expenses which you will be claiming as a deduction under PGBP or IFRS. From where these incomes and expenses you will bring? From your books of accounts only. Whatever profits and gains you are calculating, whatever IFRS income you are showing to us, from where we will verify that whatever profit you have calculated, whatever IFRS income you have calculated is correct or not. Even we will have to verify, no? So from where we will verify that, okay, these incomes you have taken, these expenses you have taken as a deduction. To verify that thing, we would require your books. And according to us, even you would also require the help of your books to take the incomes, business income from your books. Take the IFRS income from your books. Hello. Take the expenses of PGBP from your books. Take the expenses of IFRS from your books. These things you will definitely bring from your books only. If your books are regularly maintained on mercantile basis, what did I say? If your books are regularly maintained on mercantile basis, meaning due basis, what does that mean? Come on, tell me. Incomes of this year recorded in this year, whether received or receivable. Hello? Forget about that. Is it received? Is it receivable? We are not supposed to see. Is the income related to this year will be recorded in this year's books, mercantile basis. Is the expense related to this year? Expense is for this year, whether you have paid or it is still payable, will be recorded in this year's books. That's it. This is mercantile basis, due basis. We have been doing this thing since very old days, when we entered in the commerce. From the very first year, we are taught this mercantile basis. What is cash basis? Come on, tell me, what is cash basis? Cash basis of accounting means whatever income I have received in this year, whether that income relates to this year or not, I don't care. If the income is received in this year, I will record in this year. That income may be for this year or maybe for any other year. Hello? But I will record in this year's books because it is received in this year. Whatever expenses I have paid actually in this year will be recorded in this year's books. Whether those expenses are for this year or any other year, I don't care. I have paid them in this year. I will record them in this year. Cash basis of accounting. Getting my point? Now just imagine if your books are regularly maintained on what basis? Mercantile basis. So from those books only, you are going to bring the PGBP incomes and IFRS incomes under this head, no? From those books only, you are going to bring expenses allowable under PGBP head and IFRS head, no? So if the books are maintained on mercantile basis, so income and expenses are also recorded on mercantile basis. So the incomes and expenses which are recorded on mercantile basis, from those incomes and expenses, you are bringing PGBP incomes and expenses. So your PGBP income will be calculated on mercantile basis. Your IFRS will be calculated on mercantile basis. Getting my point? But what if your books are maintained on cash basis? Then from that books only, you are going to bring PGBP incomes, IFRS incomes, PGBP expenses, IFRS expenses. Hello? So definitely your PGBP and IFRS is going to be calculated on what basis? Cash basis only. Because by taking the help of those books only, you are going to calculate these two heads. And if books are maintained on mercantile basis, you have to calculate your PGBP on mercantile basis, IFRS on mercantile basis. You cannot have separate, no. Books are maintained on mercantile basis and bloody you are calculating your PGBP and IFRS on cash basis. If we want to check, there has to be some parity, no. Because while verifying your PGBP income and IFRS income, we would require, the income tax department would require the help of your books. And in your books, everything is written on mercantile basis. So you should also calculate everything on mercantile basis. If in your books, everything is recorded on what? Cash basis. You should also calculate everything on cash basis. Understanding? Otherwise, everything will be chaotic. And we will not be able to verify. And neither you will be able to calculate these two heads properly. Just imagine how much efforts you will have to put. Everything is recorded on what basis? Mercantile. And from that, you will take only cash basis. PGBP and IFRS. Why are you making the two things separate? Take the incomes, PGBP incomes from your books. Take the IFRS income from your books. Take the PGBP expense from your books and take the IFRS expense from your book. Taken in the same manner, no, in which they are recorded over there. So that your PGBP and IFRS is computed on mercantile basis if the books are on mercantile basis. Understanding? This thing you are not supposed to follow for other three heads. Only for PGBP and IFRS. So section 145 subsection 1 says that the method of accounting regularly followed by the employee, by the assessee to maintain the books of accounts. The method of accounting regularly employed by the assessee to maintain his books of accounts. That same method of accounting is to be applied to compute the PGBP income and IFRS income. Will you remember this? So meaning that your all the PGBP incomes and IFRS income of this year will be taxable in this year, whether you have received or it is still receivable. All the PGBP expenses and IFRS expenses will be allowed as a deduction in this year. If the expenses are for this year, will be allowed as a deduction in this year only. Hello, whether you have actually paid or they are still payable. So that your PGBP and IFRS income are calculated on mercantile basis. Why you are doing it? Because you are regularly maintaining the books on mercantile basis. So this should also be calculated on mercantile basis. All the PGBP incomes and IFRS income which you have actually received in this year will be taxable in this year. All the PGBP and IFRS expenses which you have actually paid this year will be allowed as a deduction in this year. Calculated on cash basis. Why you are doing? Because your books of accounts you are regularly maintaining on cash basis. Got it? Sure everyone? Next one. Now coming to 145.2. Section 145 subsection 2 tells you, this section tells you that ICDS, income computation and disclosure standards will be applied also to be complied while calculating your PGBP income. So whenever you are calculating your PGBP income, there are certain income computation and disclosure standards. Just like your accounting standards are there, just like your auditing standards are there, standards on auditing are there, there are standards for computation and disclosure of your income under the head PGBP. And if those standards are getting applicable on you, you have to apply those standards also while computing and disclosing your income under the head PGBP for the income tax purpose. So as a chartered accountancy student, no, while doing the accounting for any entity, you are supposed to follow accounting standards, Ind AS and all, in order to record the transaction in books, accounting the transactions. Yes or no? If you are becoming a chartered accountant and you are going for audits or your engagements, so while doing those audits or engagements, audit assignments, you have to follow certain auditing standards. These are the best practices which everyone should follow. Audit evidence, how will you collect? How will you make the report? Report writing requirements are there. So standards are there for auditing also. Just like that, under the Income Tax Act, whenever you will compute the PGBP head and disclose the PGBP head income, There are standards made for computation and disclosure of your income under PGBP head. Those standards, if they are applicable to you, you have to follow those standards for computation and disclosure of your PGBP income. It is a requirement of 45 too. But don't worry, this ICDS is not applicable right now. Those ICDS you will study in finals here. Getting my point? Very interesting, but you will learn them in finals here. But right now you are supposed to remember PGBP head and IFRS head will be calculated by using the same method of accounting which is regularly followed by the assessee to maintain its books of accounts. And PGBP income, the computation and disclosure of the PGBP income will be done as per the income computation and disclosure standards applicable in the case of assessing, which we are going to learn under finals here. Okay. So right now you will not be bothered and there will be no requirement of, ICDS also in the questions which we are going to solve. But in finals here, definitely this is going to come. Okay. Shall I move ahead? So this is the end of our first part of the entire chapter. Basics we have covered. Now covering the basics, what we learned? Come on, tell me. Covering the basics, we have learned that what all incomes will be taxable over here. And while taxing these incomes, computing the PGBP head or IFRS head income, how that income will be computed? That income will be computed as per section 29. But whenever you will be calculating the income from PGBP head or IFRS head later on, method of accounting regularly employed by the assessee while maintaining the books needs to be followed for both these heads. Got it? Sure? Should I move ahead? This is the end of the second part. See, I'll share these notes with you today on the group. Don't worry. Right? Pay attention. Is activity of owning and maintaining racehorse and all. I've discussed everything with you. Okay? Everything is discussed. Casual activity. That also I have discussed. Then now I'm coming to the deductions which are allowable under section 30 to 37(1). Okay, so this is the second part of your chapter. Very important, very interesting part. You'll enjoy it. Now see, you come to know that these incomes are taxable. Okay, out of these incomes, I have to minus something. Now what all things I will minus? That is given from section 30 to 37(1). So in that very first section is section 3030. Which section, friends? 3030. Now section 30 tells you that if you are an assessee, you can be any person, you are doing any business or profession, you are using, assessee is using any building. Where he is using this building? He is using this building in his business or profession. Do you remember? This building, we tried to take in house property head. But house property head said, no, I will not keep this building throughout. So the building which was thrown out of the house property because it was used for the purpose of your business or profession, yes or no? That building is coming here. Now tell me, is this building used for the purpose of your business or profession? Will there be expenses with regard to this building? So definitely, simple. This building used for the purpose of business to earn your business income. So this building is helping you to earn the business income, no? So whatever expenses which you'll incur on this building has to be taken as a deduction from that business income only, no? Which this building is helping you to earn. Hello, sir. Common sense. If this building is used for the purpose of your business or profession, meaning that this building is helping you to earn a business income. So the expenses of that building should be allowed from that business income only, no? Which this building is helping me to earn. Sure. So what expenses of this building can be there? So section 30 says these four expenses I will say. What are those four expenses? I will write down. Okay. Rent of the building, rates and taxes of the building, repairs of the building, and insurance premium of the building. Hello? Did I write etc. or only these four expenses? Any other expense of this building, will it be allowed as a deduction or it will not be allowed as a deduction? Will be allowed. Section 30 says for this building I can allow only four expense. But for this building, if any other expense is incurred, that is out of my purview. That will be allowed under PGBP head, but not as per section 30. It will be allowed as per other section. Example, to buy this building, you took a loan. And on that loan, you are paying interest. Is that interest related expense to this building? Yes, which was used for my business or profession. But will that interest be allowed as per section 30? No, there is a separate section for that. That is a business loan now. The loan which you have taken to acquire asset in the business is your business loan. And on that business loan, whatever interest you are paying, that interest is anyways allowed under section 36 subsection 1 clause 3. Later on you are going to see that. So if that interest is getting allowed there, why would we allow here? So any other expense of the building, what to do? There is one section you will come to know, 37.1, general deduction. So whatever expenses covered specifically in a section, that section will allow the deduction for those expenses. Yes or no? But whatever expense are not covered in specific sections, like salary to staff, some small PT expenses happening in the organization, like electricity expenses paid, advertisement expenses incurred. Many times to do the business, there are many expenses which can happen. But those expenses are not covered by any specific section. But those expenses are related to my business, related to my profession, wholly and exclusively incurred for the purpose of my business or profession. Revenue nature expenses. Do one thing, claim all those expenses as a general deduction under 37.1. So if there is no specific section which allows you to take the deduction for a particular expense, don't worry. If that expense is of revenue nature, incurred wholly and exclusively for the purpose of business or profession, you can claim it as a general deduction under 37.1. So now tell me, if this building is there, these four expenses are specific expenses which your section 30 says that it is allowed. For this building, any other expense will happen? No. Hello. That is not covered by section 30, will be covered by other sections or maybe under 37.1. Getting my point? But even those expenses will be allowed as a deduction. Why? Because those expenses are incurred on the building which is used in the business or profession to earn business income. So from that business income, the expenses of that building should be allowed. These expenses will be allowed as per section 30. Other expenses will be allowed as per different sections. Getting my point? Everyone? So tell me. First expenses, rent. Rent of this building will be allowed as a deduction. Rates and taxes of the building will be allowed. Rates and taxes means municipal taxes also covered. Any other taxes paid to the state government also covered. Hello. any tax related to your property, any tax related to your building. It can be municipal tax also, it can be state property tax also, it can be any tax, will be covered in rates and taxes. This is not house property head, this is PGBP. In the house property head, you take the deduction only for municipal taxes. Here you can take the municipal taxes also and state property taxes also. Getting my point? All the taxes, all the rates and taxes of that building, you can claim here. Even the repairs of that building, you can claim here. Even you have taken any insurance policy of that building and you have paid the premium of that insurance policy, take the deduction for that premium also. But wait, this building now, assessee is the owner of the building and assessee may not be the owner of the building. Possible, both the things are possible. Now if you are the owner of the building, no, then you cannot claim rent because you are using your own building in your own business or profession. Hello, will there be any rental expense for you? No. But if you are not the owner of the building which you are using for your business or profession, you are not the owner of that building, then definitely you would have paid the rent of that building. You can claim that. Hello? Now, whether you are the owner or you are not the owner of the building will not make any difference. All the expenses can be claimed. All the other three expenses can be claimed. So, rates and taxes of the building paid by you will be allowed as a deduction under section 30. Whether you are the owner of that building or you are not the owner of the building will not make any difference. Repairs expenses incurred on the building will be allowed as a deduction. Hello? Whether you are the owner of the building or you are not the owner of the building. Insurance premium on the policy taken for the building will be allowed as a deduction under section 30. Whether you are the owner of the building or not the owner of the building will not make any difference. But bloody rent, how do we allow you? Rent expense is not happening only because you are the owner. How can the owner incur rent of that property which he is using in his business? Hello? Which belongs to him only. Will there be any rental expense? No. So why to give you that deduction? Getting my point? So there are few important things which I would like to draw your attention. See, if I want to end section 30 here, I can end here and I can go. 30 is over. Let's move to 31. But that will not be the thing. Your purpose will not be solved. Getting my point? So what I will be doing, I will be discussing very important things with regard to rent. That is my note number 1. Then I will be discussing very important thing about rates and taxes. That will be my note 2. Then I will be discussing very important thing about repairs. That will be my note 3. I will not be discussing anything about insurance premium. Whatever discussion was there is done. No important things. Insurance premium paid, no. Whether you are the owner of the building or not the owner of the building, claim it as a deduction. Done. Done. But I have to discuss for these 3 items. They can put you in trouble. So I have to first make sure that you are not put into trouble. Okay. So I am going to do some important discussion with you. Pay attention. This is Mr. A. Can I say he is an individual? Okay. And he is a proprietor of a business known as A Traders. A Traders is a business. He is running a business on the name of A Traders. Yes or no? And he is the whole and sole owner or the proprietor of this business. So in the eyes of income tax law, hello, in the eyes of income tax law, a proprietor and his business are not separate entities. They are one and the same. Will you remember this? Now, This proprietor, Mr. A, is having a building, meaning some office will be there, some shop will be there. Of this building, Mr. A is the owner also. Okay. Now this building is used by A in his business. Used. Getting my point? Now, when Mr. A will prepare his P&L account of the business, what he will do, you know? He will write expenses, expenses, expenses. He will write rent. Rent here. Possible? Because see, in the accounting, no, when he'll be doing the accounting of his A traders, accounting will be different, no? So in that accounting, he is doing the accounting of his business. In that accounting, he is showing that this rent he is paying for what? This premises. The business have not actually paid, or even if it is paid, it stays with the owner only, no? How can you bloody pay the rent to yourself from your own business? Money is from one pocket, is going to the another pocket. It stays with you only, no? So in your business, whatever P&L you have made, in that P&L, if you have debited this rent is not your real expense. This is your imagination in the P&L account. So to calculate your net profit, hello, this rent was reduced or not? Should it be reduced? Should it be allowed or it should be disallowed? It should be disallowed. Add to your profits again. This rent will not be allowed as a deduction because this is not your real expense happening in the business. This is just your imagination debited to P&L. Got it? First thing, will you remember this thing? So owner cannot take the deduction of rent, even if that rent he has debited to the P&L account. Now pay attention. This is Mr. X. He is an individual, okay, no? And this is a partnership firm, XY and company. And in this firm, Mr. X is a partner. Possible or not? And Mr. X, who is a partner, he is the owner of a building. Who is the owner of the building? Individual. Don't you think in the eyes of Income Tax Act, individual is a separate person and firm is a separate person? Now the persons are separate. Hello? Now there can be income to someone, there can be expense to someone. Now real income and expense will come. Getting my point? Now this building was given by him to the firm to be used by the firm in its own business or profession. Yes or no? So the partner is saying to his own firm that, okay, take this building from me, use in your business or profession. Whose business or profession? Firm's business or profession. Okay. And wait, for that, firm was giving rent also to the partner. Can this rent be claimed by the firm under section 30 out of its PGBP income? Yes or no? Yes or no? Yes, no. Why? Because firm, if the partner would not have given, the firm would have taken the building from someone else and paid the rent. That rent was allowable to firm, no? Hello, sir. So if I would have paid this rent to someone else, it was allowable to me as a deduction, no? And just because I am taking the building on rent from my partner, isn't it my real expense? It is my real expense. It has to be allowed. This rent will be allowed as a deduction in the hands of the firm. Yes or no? So while the firm will be calculating its PGBP income, as per section 30, the firm can take the deduction for this rent out of its PGBP income. Why? Because this rent, Mr. X will also show as his income from house property. Because for him, now this will be his let out property. Understanding or not? So for Mr. X, the house property is let out. So he will show this property as his house property under the house property head as let out property. And the rent which he is receiving from the firm, no, that rent he will show as actual rent of his let out property to be considered to calculate the annual value of this property in his hands. Got it, everyone? Now one question. What if this rent was not charged only? The building was only given for use. Tell me, is there any rental expense happening to the firm? No, because the partner is not charging any rent. Hello, sir. So no rent spent, no deduction for rent. No rent spent, no deduction for rent. So at the very first instance, the firm will not record only the rent in the P&L, no? Because the firm has not incurred that rent. Getting my point? So no rent will appear in the P&L. So no rent appearing in the P&L, no deduction for rent. Getting my point? Hello, sir. And is the partner earning rent? No. And partner is not going to show this property under the head house property also now. Because the partner will say, this property is used for my business or profession. Partnership business is my business only. And I'm using that property in my business. See, I'm not taking a rent also. So this property will not be shown by the partner under the head house property. Rather, this property is used by the partnership firm. Hello. Any expenses of this property will now be claimed by partnership firm other than rent, because rent is not happening only. Hello, sir. Got it, sir? So whatever I have discussed now, pay attention. Pay attention. Assessee is any person who is engaged in any business or profession. In that profession or business, building is used. For that building, rent, rates and taxes, repair, insurance premium is incurred. Assessee can be the owner of that building. For that building, the assessee can be the owner or he cannot be the owner. If he is the owner, except rent, he will claim all the other expenses. But if he is not the owner, he will also claim the rental expense. Rent also he will claim, rates and taxes also he will claim, and repairs also he will claim, and insurance premium also he will claim, if he is not the owner. Getting my point? Now pay attention here. Check. Notional rent debited to P&L account for own building used by a proprietor in his own business or profession. Will it be allowed as a deduction? No deduction under PGBP or any other head. Forget about that rent. That rent does not exist only. That rent is not a real expense only. That rent is an imagination. Just debited to P&L. I've already told you, this. Now he is a partner. Partner has given his building to the firm. And firm is using that building in its business or profession, for which the firm is also giving rent to the partner. Two effects. First, the partner will show that property as his house property under the head house property, LOP, and pay the tax on that rent. Partner will have to pay tax on that rent, and that rent is an expense for the partnership firm, no? So the firm will be claiming the deduction for this rent under the head PGBP as per section 30. Done? But what if this rent is not recovered, sir? The building which belongs to the partner was given to the firm to be used in the business of the firm, and the rent was not recovered, sir. So if the rent was not recovered, partner is not going to show this property under the house property head. Hello? and the firm is not incurring any rental expense. Is the firm paying any rent? No, no rental expense incurred, no deduction. Don't talk about rent also. And now whatever other expenses like rates and taxes, repairs, insurance premium of this building that is paid by the firm will be allowed as a deduction to the firm, because the building which is used by the firm in its own business or profession, even though it is not owned by the firm, any rent, any rates and taxes, repairs or insurance premium paid by the firm on that building, the firm can claim it as a deduction. Hello? Sure, no? Understanding, no? Last point. Now last point I will explain like this. Pay attention, huh? See, this is a building. Okay. Now there is one assessee. Okay. The building is taken on rent, rupees 1,20,000 by the assessee. So now the assessee will use this building in his business or profession. Sure? Hello? What if the full building is used by the assessee for his own business or profession? Then full rent he can claim as a deduction. Getting my point? What I want to tell you. But what if half of the building, no? Half of the building, meaning this part, can I say 50%? Only this part was used in business or profession of the assessee. This balance part, no? Hello? Since the building was very huge, no? He used only the half portion of the building in his business, but the remaining half, no? Remaining half of the building was sublet. Why I am writing sublet and not writing let out? Because he is not the owner of the building. So the building which is there with him, further letting out that building which he has taken on rent means what? Sublet. If he was the owner of the building, he would not be paying the rent only, no? And the half portion he would have given on rent would have been let out. Now the portion of the building which he is letting out, is he the owner of that portion? No. Hence that letting is not known as let out, that letting is known as subletting. Tenant further letting out the rented property to someone else, no. That letting by the tenant is known as subletting. You all know this, I guess. Yes or no? Now tell me. Now sublet to some other person, and that other person is giving rupees 70,000 rent as his income. Rent income is happening to the assessee now. Understanding or not? Come on, tell me. Now two possibilities are there. How many possibilities? Two. First question, understand. Is the entire building used by the assessee for his business or profession, or only half is used? So can he claim the entire 1,20,000 as deduction under section 30, or only half? Only half. Meaning 60,000 will be the rent paid for that part which he is using for the business, no? The part which he is using for the business, for that part, how much rent he is paying? If he is paying 1,20,000 for the entire building, so that part which he is using for business, for that part, how much rent he is paying? Only 60, no? Half. Half portion 60,000 rent, half portion 60,000 rent, half portion which I am using for my business, for that portion, how much rent I have paid? 60,000. That 60 only I will claim as a deduction under the PGBP head as my rent expense of that building which I am using for my business or profession. What building I am using for my business or profession? Color, red color. For that building, whatever rent will be there, that I am going to claim as a deduction. That is 60 only. How did you know, sir, it is 60? Ayyo, that 60,000, if for the building, entire building, the rent is 1,20,000. So half of the building which is used for my business or profession, how much rent I would have paid for that half portion? 50% of 1,20,000, no? 60 only. So the remaining 60 is the rent paid for that portion. Remaining 60 is the rent paid for that portion which I am not using for my business, which I am subletting. And by subletting, I am earning 70,000 rent. Can I say this rent is my income from other sources? To earn this rent, I had to take that half portion on rent also. And what was the rent of that half portion? 60. So 70 minus 60, 10,000 will be my IFRS income. Getting my point? So whenever I will calculate my IFRS income, in my IFRS, I will show 70,000 as my rental income. And to earn this rental income, I had to let out this half portion. So what was the rent of this half portion? 60,000, no, which I have paid. 60,000. So my taxable IFRS will be only 10,000. And what was the rent of that part which is used for business or profession? Rent paid for that part which was used. Sir, for entire building I paid 1,20,000. Hello. But only the half portion was used for my business or profession. So out of that, half only relates to that part which I have used for the purpose of business profession, only 60,000. This 60,000 will be allowed as a deduction under section 30, under the head PGBP. Yes or no? So what is the net effect? Come on, tell me. How much deduction I am exactly getting under PGBP head? 60. 60,000 PGBP income will be reduced and 10,000 IFRS income will be increased. So net effect 50,000 income reduced. 60 reduced and 10 increased, meaning what? Reduction of 60 only, reduction of 50 only, no? This is one way in which the treatment can be given. Take 72 IFOS, reduce 60,000, 10,000 taxable over there, and then 60,000, half the rent relates to what? That portion which is used for the business. That 60 take as a deduction under PGBP. This can be one treatment. I'll give you another treatment. For this entire building, what was the rent? 120. Hello? Half was let out. And by letting out, how much rent recovered? 70,000. So can I say out of 1,20,000, which was for the whole building, I have recovered 70,000 by letting out the half building. So out of this, if I am recovering 70 by letting out the half building, how much rent still remains? 50,000. Out of 20, 70 recovered. The balance 50,000 rent remains, no, which was paid by me. This is the rent of this portion which was used for business. Claim it under PGBP. Done. Simple. Net effect has to be 50, no? So net effect 50. So under the head PGBP, I will not be claiming 60. I will be claiming only 50. Then I don't have to show IFRS income also 10,000. Hello, sir. Even this can be given as your effect. This is also correct effect. Understood? So two things you can do. 10,000 under IFRS. How? 70 minus 60. And 60,000 under PGBP. Or the second effect, 1,20,000 don't take as a deduction under PGBP head. Out of 1,20,000, 70 which you have recovered by letting out the half portion, no, reduce. Whatever balance remains, no, out of 1,20,000, 50. This will be the rent paid for that portion which you are using for the business. Take the deduction for that only. Understood everyone clearly? Sure? Very good. Very, very good. Very good. So this was the thing which I wanted to discuss, which I have discussed just now. Numbers are also same to same. Okay. Now note 2. This relates to rates and taxes. Okay. Now pay attention. Before note 2, I am going to tell you note 3, repairs. You are the owner of the building, or you might not be the owner of the building. But the building is used for the purpose of your business or profession. For that building, can you incur some repair expenses? So take the deduction for those repair expenses also. Section 30 saying that from your business income, also the repair expenses will be allowed as a deduction. Reduce the repair expenses also. But remember, the repair expenses which you want to claim as a deduction under section 30, no, these repair expenses must be current in nature. They must be your current repairs and not capital repairs. What did I say? For current repairs only you are going to get this deduction. Any capital repairs to your building cannot be allowed under section 30. So what is capital repairs? Any repairing cost because of which either the value or the capacity of your building enhances or increases. Your building's value increased by this repairing cost. Earlier the value was 50, but after doing this repairing, the value becomes 70. Earlier the value was 50, now it becomes 80 because the area also got increased. The capacity of the building got increased because of this repairing. For example, this is the entire room, okay, now. In this room, I can accommodate only 10 employees. But now the business is growing. I want more employees and I want more space to accommodate more employees. So what I have done, I have constructed an additional floor on this building. Or what I'll do, I'll not construct an additional floor. I will break one wall and extend the building, extend the part. Now tell me, is the area getting doubled by this repairing cost? Extra floor space, extra floor space. So now the property will become big, the capacity will become big. And for this big property, the value will also increase, no? Hello, sir. This is repairs of capital nature. Sir, what are the revenue repairs, sir? One small tile in the building broke. You called some person and got it fixed. 2000 rupees. By incurring this 2000 rupees, the value of your building got increased. Capacity got increased. Or it remains same. These small PT expenses which you are incurring to keep the building in its working condition. Hello. Because of these expenses, the value or the capacity of the building is not increasing. These are current repairs. For example, on all the walls, you got the paintings done. The paint was, very, this thing, old. So you got all the walls painted. Or there is some leakage happening from the ceiling. You got that fixed. You got that repaired. By incurring these expenditure, is the value or the capacity of your building increasing, enhancing? No. So these are the repair expenses of revenue nature, current nature will be allowed under section 30. Only this will be allowed. Getting my point? So what about those big repair cost? Because of which the value increases, will not be allowed under section 30. Add to the value of your building, add to the cost of your building, will be allowed in small parts in the form of depreciation. the cost, capital cost needs to be added to the cost of building. Hello? So you are the owner? Tell me yes. Have you incurred any capital repairs? Yes. The amount of that capital repairs was 10 lakhs. Will you claim that 10 lakhs here? No. Add that 10 lakhs to the cost of your building. And because of that, the value of your building will increase. Hello? And that increased cost of building will now be allowed to you in the form of depreciation. Getting my point? But what if you are not the owner of the building? Can you incur capital repairs? Yes, I am not the owner of the building. So I can myself also incur capital repairs. Will that capital repairs be allowed to me? No. For me also it is not allowed. For me also, I will have to add to the cost. But cost is not in my hands. Cost is in the hands of, hello, owner? No. I am not the owner. How would I add this 10 lakhs to the cost of the building? I don't have the cost of the building because I am the tenant. No. So don't worry, this 10 lakh will be treated as your deemed building. Will be allowed in the form of depreciation only, cannot be claimed here under section 30. So if you are not the owner of the building, what did I say? If you are not the owner of the building and still you have incurred some capital expenditure, capital repairs on the building, that capital repairs for you also will not be allowed as a deduction, and that capital repairs incurred by you on the building will be treated as your deemed building, which you can claim it in the form of depreciation in subsequent years in small parts. But we cannot allow that entire 10 lakhs at once under section 30 because that is not a current repairs, that is a capital repairs. Got it, sir? This was your note number 3. Come here, watch it. Note number 3. Repairs of building used in the business or profession. Current nature repairs. If you are the owner, if you are not the owner, will not make any difference. Current nature repairs, you can claim it as a deduction. But capital nature repairs, which increases the value or capacity of the building, even if you are the owner of the building or you are not the owner of the building, forget about that expense. That will not be allowed under section 30. But don't worry, if you are the owner, no, add it to the cost of your building will be allowed in the form of depreciation. But if you are not the owner of the building, don't add it to the cost. Consider this amount only as the deemed building. And this amount will now be allowed to you in the form of depreciation. Got it? Easy, no? Sure? Now, note 2. Now, if I start this note 2 right now, no, it will take another 40 minutes, 30 to 40 minutes. And that much time we don't have right now. So what I'll do, section 30, any business or profession building is used. For that building, rent, rates and taxes, repair and insurance premium, these 4 expenses are allowed as a deduction. So from your business income, these 4 expenses you reduce. This is allowed to be reduced out of your business, meaning the deduction is allowed. Deduction allowed means from your business income, you can reduce these 4 expenses. Yes or no? But wait, reducing this, take care of few things. Reducing this, take care of few things. This is already done. I just have to do the discussion of rates and taxes. So tomorrow we'll continue from this part. Okay? See you all tomorrow. Any doubt? Then tell me.